what Danny Berger has for us in store, and she joins us now with our stocks to watch. Danny, let's start with the banking sector, and we talked there to CaixaBank in the Spanish banking sector, but NatWest in focus here in the UK as well, and it's rising interest rates that's playing out pretty well for some of these banks.
Exactly, and NatWest certainly part of that story. I mean, perhaps more so just because of the fact that in the UK, really the first bank, the BOE, to start to rise rates. So NatWest beating expectations. Jeffrey says, look, they ticked all the boxes for this quarter, more loan loss reserves, consumer loans, those were looking pretty good. But it's really interesting, NatWest saying that, yes, a really good quarter, but they did flag concern going forward about the impact that inflation would have when it comes to the outlook for borrowers. So it's this two sides of the same coin that all these banks are dealing with, that yes, this past quarter was strong, but does inflation start to impact them in consumer demand?
Good morning, Danny. As you might have noticed, Anna and I are very excited by gas prices and the European energy story. So tell us what's going on with Eni.
Yeah, Eni, likely to foreshadow what we're going to get from some of the other oil majors reporting later today. Really strong earnings as well. All has to do with that gas oil story, prices jumping there. Now, one of the interesting things that we didn't quite get from the results is how things play out with Russia. They have pledged before to cut their dependence, but of course, it's this strange divergence within Europe about who is willing to open these ruble accounts. Eni, for its part, it still has some short-term contracts with Russia. It's made preparations to be able to be paid in rubles. So that's going to be a story really interesting playing out for Eni. But again, for now, it's all about these really strong earnings.
Okay, so that's the focus in terms of the gas story today. What about Apple? We've heard from them overnight, of course, and some areas of disappointment, and that may not play well for suppliers.
Exactly, this $4 to $8 billion that Apple says they're going to take as a hit in the current quarter because of these supply chain issues. So a lot of the suppliers, a lot of the tech-oriented companies, chip-oriented companies, AMS, Infineon, for example, might be under pressure today. And just, generally, if Apple's being a little bit pessimistic, we might see, again, these kind of stocks react.
Danny, thank you very much. Bloomberg's Danny Berger with the stocks to watch. And Mark, going into the European trading day, then, sentiment looking pretty good this morning.
Absolutely. I think we've seen a bottom in Hong Kong stocks, and I think that's a positive mood into the weekend. There are problems out of the US, though.
A bold call to leave you with this Friday. The Open is up next. Futures point higher. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome to the European market open, everyone. A minute to go until the start of cash equity trading. I'm Astrazeneca in London with Tom McKenzie.
And here are your top stories. Failing to deliver. Amazon posts a surprise loss as Apple warns supply constraints will hit revenue. Both slump in after-hours trading. Surprise contraction. The US economy posts an unexpected drop in the first quarter. We will speak to Adam Posen, president of the Peterson Institute for International Economics, this hour. Plus, Elon Musk offloads $4 billion of Tesla stock to help fund his blockbuster Twitter deal.
Tom, let's also take a look at the futures. Now, FTSE 100 futures and also the DAX futures supported. First of all, China promising to scale up economic stimulus. Also, traders looking at the crackdown on Chinese tech stocks, thinking it's going to get better, it's going to give a lift. And so they're ignoring the troubles that we have in tech US.
And Chinese tech, absolutely. Chinese tech stocks are absolutely on fire this morning on the back of that speculation that indeed that regulatory crunch that has been pursued by policymakers in Beijing will start to ease. And then the 24 men and 1 woman of the Politburo of China coming out and saying they will put in place measures to hit that GDP growth goal of 5.5% this year. Many economists, of course, have thrown skepticism on whether that is possible. Indeed, as China continues to pursue its COVID-0 policies. The details, we don't have those yet from the Politburo. Just the fact that they highlighted that was enough to lift assets, certainly on the mainland. So some relief coming through from China. We have the data coming through when it comes to CPI from the likes of France and the GDP print as well from that economy to digest. The Spanish IBEX is currently up 0.7%. We'll walk through some of the Spanish bank earnings as well, including BBVA shortly. The CAC Garonne over in France is getting 0.8%. The latest GDP print coming in flat, essentially no growth in the latest quarter. That was a surprise. CPI also coming in above estimates for France, just reiterating and underscoring the fact that inflation remains a challenge for the Eurozone. The FTSE 100 getting 0.5% this Friday morning, up 50 points, and the Italian FTSE getting above 1%. We'll move it on and see how things are playing out then across these assets. The future stateside, it was a solid session on Wall Street yesterday, and then you had the complexities of Amazon and Apple notably pointing to a potential $8 billion hit as a result of supply chain challenges, again, linked to China. We'll unpack that story for you later in the show. The futures, though, stateside pointing to losses of 0.4%. The CSI 300, this is the benchmark for mainland China. I wanted to highlight this for you on the back of those comments from the Politburo, gaining 2.4%. So has the funk in Chinese equities come to an end? Are we looking now for those material details on what that policy will do to shore up growth? The US dollar, we've looked at the strength that's come through for the greenback. It's currently off 0.4%. Bit of relief then across these FX markets for the likes of the euro and the yen. You also saw that reflected in the Chinese currency, which has been under a lot of pressure. 2.83 is what you're getting on the US 10-year. Not a lot of movement there when it comes to US Treasuries. Francine?
Yeah, I love that. The funk, it's CFA level 3. It's a technical term, and it really underpins everything we do when it comes to sectors. Look, I'm looking at the sectors, Tom, and most of them are higher. There's only one stock, actually there's only one industry that's on the down, that's real estate. So you do have pockets overall of very short or very small companies that are down, but overall 18 industry groups are on the up. Basic resources getting 2.6%, construction, chemicals, auto parts, and it's only real estate, but it's pretty much flat. So some of the staples that we're looking at are basically companies that maybe didn't do so well on earnings. Overall, we're seeing quite a lot of positive move out there in stocks today, Tom.
And the broader picture when it comes to earnings is that they are positive. You have a number of stories today that we can unpack for you. NatWest coming out, the biggest corporate lender here in the UK, benefiting from a high interest rate environment, benefiting from the end, or at least the easing of the pandemic restrictions, gaining 1.4% currently in the first few minutes of Friday's open. So a positive set of results for NatWest as it looks ahead to the rest of the year. Astrazeneca, of course, in focus focus over its vaccines that it developed for COVID-19, lower by 0.4%, despite the fact that it beat. It had strong demand for some of its cancer treatments. When it comes to BBVA, we talked about the Spanish lenders and how that is propelling some upside across the IBEX this morning, gaining more than 3%. They beat again in their earnings and said that they are going to be meeting what they described as their ambitious goals and targets for the full year. So positivity when it comes to BBVA, a solid set of earnings. Francine.
Tom, let's get over to our Bloomberg M Live managing editor. He is at Mark Cudmore. And Mark, you're looking at the dynamics in Hong Kong tech stocks. Good morning.
Good morning, Francine. I very much am. Tom's pretty excited about Hong Kong stocks, and so am I, because this is the price action today of a market that is bottoming out. Yes, I think this is a market that is bottoming out for the medium term. It's really quite exceptional what's happened today. Now, the catalyst was the Politburo statements, but as Tom said, they didn't really say much concrete. It was pretty mild news. Now, it's always interesting when a stock market bounces very, very powerfully on only a mild positive, but there was an extra message from the Politburo here. It was the timing. Their statement normally comes out at the end of the day, after the market's closed. But they are clearly worried that if we give that statement on a Friday before a long weekend, it's several days of holidays in China next week, there's a holiday in Hong Kong on Monday, they're clearly worried that traders might not get the message. Why not send the market into the long weekend really, really positively and get people chasing when they come back from holiday next week? And they will be. We basically recovered 3 weeks of losses in the space of about 40 minutes trading pre-lunch break and then about 2 minutes post-lunch break. At one point, the HS Tech Index was up 11% in the session after being down 0.8% this morning because of obviously the real negativity that came out of the US. At the moment, it's up almost 9% in the session. This is what the price action that bottoms are made out of. I think HS Tech might have bottomed out. I think if HS Tech has bottomed out, that's a real positive sign for Hong Kong stocks generally and the Greater China region.
Okay, mark that in your calendar, people. The 29th of April, that is when Mark Cudmore called the bottom for Hong Kong tech stocks. Thank you, Mark. M Live managing editor Mark Cudmore breaking down these extraordinary moves that we're seeing across technology stocks listed in Hong Kong currently, as he's saying, gaining 8.5%. But it's technology stateside as well that was making some headlines overnight. Elon Musk selling about $4 billion, we can't get away from Elon Musk, can we? About $4 billion worth of Tesla stock after clinching a blockbuster $44 billion deal to buy Twitter. Wall Street analysts suspect that Musk may need to sell some stock to cover the $21 billion equity portion of the transaction that he has personally guaranteed. With that and a wrap of the big tech earnings, we are joined by Bloomberg's Laura Wright. Laura, how are things going then for Elon Musk? How concerned should retail investors be in Tesla that he's selling down some of his stake?
Well, Elon Musk having to sell 4.4 million Tesla shares. That's why we saw Tesla fall over 2% after hours. This sends a negative signal for the existing shareholders, and it implies a limited upside and actually suggests that he believes there's more upside for Twitter's stock. Elon Musk, he tried to assuage concern, tweeting that he has no plans to sell any more Tesla stock, but it appears that the damage is already done. Dan Ives over at Wedbush says that Elon's pursuit of Twitter has become an albatross around Tesla shares, and it was only the end of last year that Elon Musk sold another significant proportion of his Tesla stake, which led the stock to fall at the end of last year.
Laura, we've also had Apple and Amazon earnings out, and they didn't do too badly, but then the stock was down.
Right, so for the world's most valuable company over at Apple, in spite of a record non-holiday quarter, in spite of $90 billion of share buybacks, it was the macro headwinds that were in focus, which is why the stock was in the red after hours. Supply chain congestion due to rolling lockdowns in China, inflation, the war in Ukraine. But if we break down some of the divisions, it was a beat for iPhones, robust demand for Macs. Services, it was a record quarter for revenue as Apple, they push more people onto the services ecosystem and content generation. At Amazon, the story was rising costs. It was a surprise loss for the quarter and a surprise forecast loss for the next quarter because they've been ramping up their scale over the pandemic with warehouses, deliveries, employees. But how are they going to fund those extra costs is the key question. The one upside for Amazon was the cloud business. Amazon Web Services saw revenue growth of 37% year over year ahead of the street, a nice number, especially for the market leader in the cloud infrastructure space.
Laura, thanks so much. Laura right there with all of the very latest juicy stories. How many iMacs have you bought in like the last 2 months? I mean, I went, Tom, to actually an Apple store because I forgot my charger in Paris. 50 euros for a charger. Can we just think about that?
Think of the margin on
just
a 50
think
euro
about that.
50 euro charger.
I know, I call it my 50 euro charger, and I use it every 10 minutes just to make sure that I have my money's worth. This is a picture for some of these tech stocks in Europe. If you look at the impact, of course, that we saw overnight in Asia, let's get it up. There you go. We're seeing a nice lift. It's more about optimism of what's going on in Asia than some of these supply constraints. Now let's get into the key market drivers with our market sector, Christine Tech. It's fine in China, but actually elsewhere it's getting slammed.
Absolutely, Francine. And I think the Apple results really show how much of a wild card China is for this particular earnings season, especially for the big tech sector. Again, Laura was saying it was a record in a lot of ways, right? These results are good objectively, but then Apple warning of a potential hit from the China situation really just takes the wind out of its sails in the share price and really shows you how important the China story is, not just to corporate earnings, but to the macro picture as well. And hence, the powerful rally that we saw in the Hong Kong tech stocks, very, very good in the short term. Just a question of how much longer it can sustain, and will it need continued support from China's Politburo?
And will that commentary from the Politburo be enough, do you think, to entice investors back? You've got a weak yuan, you've got concern about outflows. Is this a pivotal moment, do you think, for investors looking at Chinese exposure?
Well, Tom, it's certainly a powerful signal, but as we've seen in previous bouts of stimulus injections, it's a bit of an addiction for investors, isn't it? You know, they're fine for a little bit now because the Chinese authorities have really given the strong signal that they're going to be supporting the economy and supporting the markets, but it only lasts so long. We know this. The impact fades eventually. And so the question is, will they be prepared to keep injecting this stimulus into the market and to keep assuaging investors' concerns that the slowdown will be mitigated by this economic support? So we'll have to wait and see. But for the moment, of course, it's being taken positive for sure.
Thank you so much, Christine. Now let's also get some other earnings. Actually, it's an AGM. Mercedes-Benz this week said it expects healthy returns on car sales this year. The German luxury car maker is navigating supply chain issues by raising the prices of its top-end models. Now, we've been speaking with the Mercedes chief executive, Ola Kallianus.
We think that the semiconductor shortage situation will continue in this year, 2022. In our discussions with our supply partners, it should start to ease in the second half of this year, but it certainly will be with us for the whole year. And then 2023 should be at a better level.
How much more can you increase prices by?
Well, prices are made by the markets, obviously, but what is carrying our very strong performance at the moment are the very attractive products. We have a product portfolio, a lineup that is better than ever. So the demand situation for Mercedes-Benz is very, very strong. And that you could also see in our Q1 results with very strong pricing power.
So given supply troubles and, of course, these unpredictable swings in commodity prices, how would you describe how challenging would you describe the current environment?
It is a very challenging business environment. It's three effects that mainly impact our operations. On the one hand, as we just discussed, shortages of semiconductors. Then we have new lockdowns in China, in Shanghai, but also in other places in China, which affects the business and also the supply chains in China, but also globally. And then, of course, the Ukraine war. So three challenges going on at the same time. Having said that, our underlying business is very strong. We have a full product pipeline. Our electrification offensive is at full steam. So it's a situation where you have very, very strong underlying business, but facing a challenging business environment.
Europe, of course, remains in the grip, as you point out, of this energy supply crisis, Germany's dependence on Russian gas at the heart of it. What's at stake here for German industry in general?
Well, we work very closely with the German government in terms of what's going on here, and they're making thoughtful decisions. Germany can only be a strong partner and support partners if the economy is strong. So energy independence is a top priority now, and that is being worked on.
What kind of scenarios are you planning for? How do you think German industry would weather a supply shock, for example, if Russian gas is turned off?
think we have a level of uncertainty. It's very difficult to say exactly what's going to happen. But what Germany and the German industry is doing is preparing and also diversifying. Any and every company does that, as do we. So I guess we're going to have to wait and see how the situation develops.
That was the Mercedes chief executive, Ola Kalanis, speaking, of course, about German luxury automaker. But really, everybody wants to be Elon Musk. I didn't get a chance to speak to him because at that time he had to go to the AGM. It should have been my first question on Elon Musk, because it feels like everyone's just trying to catch up with, you know, Tesla. The fact that if you think of EVs, then you want a Tesla just because it's brand recognition. And I don't know how, you know, the legacy automakers catch up to that.
And a lot of analysts have said this is the year, 2022 is the year when those legacy automakers will have that pipeline coming out of their own EVs that will challenge Tesla. The challenges for Tesla are not coming from the external competitors, they're coming from Elon Musk himself.
Yeah, and the tweeting and maybe some of the delays in actually delivering some of the goods.
Absolutely. Let's bring back in Christine Aquino now to look back at what's happening across these markets. A lot of focus on the FX space this week. So much volatility, the strength of the Bloomberg dollar index, the dollar, of course, just coming through. Today is an exception. It's off about 0.4%. But we've been talking about currency weakness, the single currency, the euro, of course, but also the yuan, most notably. The upside, of course, is presumably this is a boost to those exporting nations. Why is there less of a focus on that? Why are investors more focused on the concerns about weakness around currencies and not about that boost for exporting nations?
Well, Tom, I think it really boils down to the reason behind why these currencies are weakening. And across the board, it really has to do with the fact that it's the macro picture that is quite bleak at this point. It's starting to deteriorate. We're coming down really from those levels of growth that perhaps we enjoyed from the post-pandemic period, revival. Now the story is really turning to inflation, how much that is hurting consumer demand and consumer activity, and therefore growth. And, you know, we saw that yesterday with the U.S. GDP figures, unexpected contraction there, potentially a bit of a slowdown as well here in Europe. It is very telling, again, listening to the Mercedes-Benz CEO. Again, he's concerned about China, but just the overall outlook is not great. And of course, for an exporter like Mercedes, for instance, weak currency should be good, but because it's weakening on really these broad macro factors that are expected to continue, then the outlook is not so great.
Yeah, and especially, I mean, if you have an oil shock or a gas embargo, I mean, we have actually no idea the second round effects in Europe, right? We're trying to analyze it, but what does it mean for stocks?
Well, Francine, I think the immediate reaction is probably negative. And you know, it would probably see us, if we do get to that full embargo standoff situation, then you would expect it to be quite a knee-jerk negative, particularly for equity sentiment. But yeah, it is very interesting because at the moment, really, particularly in the oil price, you're not necessarily seeing that immediate upside. And now that we're kind of talking about the possibility of embargo, Germany potentially not opposed to it, apparently, but I suppose that speaks to the factors that we're seeing in the commodity markets. Perhaps there's a question here of maybe fading tailwinds from the geopolitical situation. It's not just such a clear-cut positive anymore for the oil price, perhaps because there's probably a ways to go between talk of a potential oil embargo and actually implementing one.
We've heard a lot about inflation, of course, across these earnings and the ability for some of these companies to hold on to their margins. What is the takeaway at this point? It seems like across the board, it's been generally positive. We're meeting or beating those EPS forecasts. Is there anything that stands out for you at this point?
Well, Tom, I think the conversation around rising costs still very prominent among these corporate results that we're getting. Amazon, very notable that was a key factor in the disappointing earnings for this particular season. And it's going to be interesting to see how that plays out moving forward. I've been watching with great interest which companies, again, this season have been wielding that pricing power. We know that was a theme last earnings season. You know, they still sounded very confident, especially a lot of the consumer-focused companies, that they were going to be able to wield this pricing power, perhaps less so now that inflation really has ramped up more than anyone has expected.
We have a red headline crossing the Bloomberg terminal, and Christine, I'm not 100% sure what to make of it. Barclays now halting its market-making activities in its own debt securities. I don't know whether that has to do with regulation or maybe a little bit of the hiccups, of course, surrounding that. Barclays citing overissuance under Barclays Bank U.S. shelf. So we'll have to keep, of course, an eye on that. I guess it goes to some of the issuance that we've seen with some of the other banks and their own debt securities. Christina Aquino, as always, thank you so much for joining us to talk markets. Coming up, we'll dive into the latest U.S. GDP figures. We'll speak to Adam Posen, the former BOE MPC member and now president of the Peterson Institute for International Economics. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. We are 20 minutes into the European trading day. It's risk on across European equities, up 0.9%. You're seeing every major index gaining between 0.4 for the FTSE 100 and just over 1% for the DAX, I should say, the FTSE MIB. In terms of your sectors, just two that are in the red in the session today so far, 30 minutes into the trading session. Utilities down 0.4%. Telecoms down about 0.2. Technology, though, counterintuitively, if you look at Amazon and Apple, is up. That is because of what we've seen in China. Expectations maybe that the regulatory crunch there is going to start to ease off. And then the Politburo coming out more broadly and saying they are determined to hit their growth targets for the year. Francine.
Tom, let's focus on the health of the global economy. The U.S. posted a surprise contraction for the first time since 2020 in the first quarter. Now, GDP fell at 1.4% annualized rate following a 6.9% pace of growth at the end of last year. Now, we've had figures from France and Spain this morning. France also unexpectedly stagnating, while Spain slowed more than anticipated. Well, joining us now is Adam Posen, the great mind when it comes to global economics, president of the Peterson Institute for Economics as a side job. Adam, great to have you in the studio. There's so much that I want to ask you about inflation. First of all, are we all getting it wrong? What happens to inflation this year? Is it here to stay, or could we see actually a huge monetary policy mistake if then inflation falls off a cliff in the second half?
I doubt it's going to fall off a cliff in the second half, Francine, and thank you for having me back on with you. I think that the slowdown or the short-term bump we just saw in the GDP data, France, Spain, U.S., is reflecting some of the monetary tightening and some of the realities of the Russian invasion in Ukraine. And I don't think we should read too much into it. I think what the Fed has baked in, essentially, for hikes through the rest of this year is not going to tip us into a recession, or if it does, it's not going to be much. But it is necessary to keep inflation where it needs to go.
Do you align with the view that longer term inflation becomes structurally higher as a result of deglobalization that we're seeing, the energy transition? Is that a thesis that you buy into?
It's a thesis I buy into, but 5 years down the road. I think for the next 5 years down the road, yeah. Because I think, Tom, right now, what you're seeing is you're going to see much more of the disinflationary impact. When the Fed and a little bit the BOE and ECB all tighten, and when we work through the sort of bit of overheating we had, particularly in the U.S., that's going to be a downdraft, a meaningful downdraft. When we work through some of the supply chain problems over the last couple of years, which is part of what this inventory numbers in the U.S., these big swings reflect, that's also going to be a downdraft. In terms of the longer-term trends you mentioned, deglobalization, or as I call it, the corrosion of globalization, and energy, as Mark Carney has talked about, the price hikes, those are going to take another few years to kick in my view. So they're there, but it's not explaining what's happening today.
What is happening today? Adam, and this is actually the Posen chart. So we had it earlier this week, and I said, let's get it out for Adam Posen, because it's a wonderful chart looking at financial conditions
I'm staring at the
in
chart.
the U.S. versus China. And actually, the million-dollar question is, given where we are in financial conditions, Fed policy and PBOC, what is being underestimated from some of these tightenings in these two large economies?
Well, the first thing that's being underestimated probably, Francine, is because of lack of information to the outside world, is just what's the downside risk in China in terms of the economic shutdown, given their commitment to their zero COVID policy. And I know I'm not saying anything original, it's just that is the question. But I think the second thing is to say that the international financial system in this instance is working correctly. The U.S. is overheating, the U.S. is tightening monetary policy in a way others are not, and the U.S., for all its mistakes, doesn't have the downside risks of China from COVID right now. So it makes sense that these countries are diverging on exchange rates, diverging on financial flows. I think two things that are being overlooked or not sufficiently emphasized is, there was a lot of chatter in the markets about the yen going down against the dollar. And I think we should think of it more as the yen-yuan cross are going down together, and that a lot of Asia, I don't mean going down, but are depreciating against dollar. And I think that's a medium-term trend. I think that's real. The second thing that I think is getting a bit overlooked is the productivity numbers that were in the U.S. GDP data, which were very negative. And again, it's biased, it's one quarter, it may get revised. Right. But I think, going back to Tom's point about inflation, I think we're going to be falling more back towards secular stagnation for the next couple of years because the productivity numbers are not good.
What does that divergence you talked about, and you illustrated that with the yuan and the yen cross, mean for capital flows? Are we missing anything in terms of the risks around the divergent capital flows that result?
It's a good question. I think there is a risk. I don't think it's for sure, but there is a risk. We're at the start of a multi-year, or in the early stages already started, of a multi-year dollar appreciation, like a small version of the 80s, right? Where dollar appreciates significantly against everybody. And if you think about it, the policy mix we had in the 80s was loose monetary policy having to play catch up, loose fiscal policy, and that's how you get this rise in relative currencies. I mean, again, currencies, as Ken Rogoff always says, random walk, but to the degree policy determines anything, we could be in a cycle like the 80s. And similarly, if Europe, for reasons because of the invasion, falls into a growth problem, then that exacerbates.
Okay, Adam, we're going to pause you there. We're coming back to you after the break. We're very pleased to say Adam Posen, president of the Peterson Institute for International Economics, stays with us, focusing on the UK economy after the break. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that. Bloomberg Television. Top experts. Great questions.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. We are 30 minutes into the European trading day, and we're seeing a bit of support for these European stocks. It's a story on China, and actually the fact that technology shares in China supported on speculation that Beijing will actually relent on a crackdown on internet companies. And it does seem that a lot of European stocks are overlooking the concern we had on the French economy and also overlooking some of the discouraging earnings momentum that we had in U.S. tech stocks.
Okay, and Adam Posen, former BOE MPC member and president of the Peterson Institute for International Economics, is still with us. Adam, we left off before the break talking about Japan. The changes in terms of the inflationary picture there, we know that Japan's been stuck in this stagflationary slump for years, over a decade. But that hasn't changed, despite the world that we now live in, with all those disruptive supply chains that you were talking about. Is this demographics? Is it psychology? And what is the potential lesson that China needs to be learning from a society that is also rapidly aging?
Really profound questions, Tom, both short-term and long-term. In the short term, it's not clear what triggers the very sharp movement in the yen over the last few weeks, but it is clear that, as we were saying before the break, it's in line with the fundamentals. You're just not going to have the monetary tightening. You're just not going to have the overheating in Japan that we've seen in the U.S. And also the Japan wants, for good reason, to be in parity on exchange rates roughly with China. It doesn't want to have a big move against the Chinese yuan. So that's another reason to see yen go down. But in terms of the long-term issues you raise, I mean, I had to do a big mea culpa publicly a few years ago because I was one of many economists who used to attack the BOJ's policies by saying, you blame things on demographics. Clearly you can fix inflation, just do it. Turns out they just did it and didn't fix inflation, and we've all had, or should have, recognize that the demographic effects are real. It's not something we think of.
Adam, does it actually change the global currency playbook? And then I have a really profound question about long-haul travel and what you miss the most. But first on currencies.
On currencies, I mean, I don't think it's changing the playbook, Francine. I do think it is just reinforcing that some of the forces that have been at bay basically since 2008-9, when a lot of the major currencies were moving together, just like risk on, risk off moved together, we're now starting to see adjustments of the relative standings of these economies, and that leads to big currency swings.
And on long haul?
Long haul travel, when my wife sensibly, after COVID, is not traveling with me anywhere near as often, and so the best thing about travel then is room service club sandwiches.
Room service, full stop.
From room service club sandwiches to Brexit in the UK, and you made some comments yesterday talking about the inflationary effects of Brexit. The UK government, I remember this at the Tory party conference earlier this year, saying, look, higher wages, that's what we've been looking for. That is good. Of course, we know that real wages are below, have fallen. To your point, just unpack that view on the Brexit impact on inflation. Is there how can we get to a point where Wages are rising, but inflation is coming down. Is that an impossible conundrum for the BOE?
It's not an impossible conundrum over time, but it's probably not something we can get out of, or the BOE can get out of right now, Tom. So I made a comment yesterday, your Bloomberg colleague Lizzie Burton reported on it, and I should say, I offhandedly said 80%, and I shouldn't pretend to such false precision. The important point for your viewers to understand is that the primary driver of inflation in the UK right now is wages. And that's when it's serious, not because you want to keep wages down, but because that's the most important factor and it's the biggest factor. And once it gets in momentum, it's hard to reverse. And the way to think about the Brexit effect is there's the UK, there's EU, or rather Euro area, there's US. They all had inflation. But EU, Euro area has had basically no wage inflation. And that's in part because they had a much better approach in the US of keeping people in their jobs during COVID, not having them go out and rematch with jobs. US had this fiscal excess briefly and wage inflation because we did have this mess of having people, millions of people become unemployed suddenly and then have to go look for jobs, and that turned everything around. So the UK, and this is similar to something Governor Bailey said, but it's my view, the UK is in between because it didn't make the labor market mistakes that the US did. So it's like Euro on that, but it's got wage inflation like the U.S., and that's Brexit.
But that's what, because that's staff shortages. And again,
exactly.
I mean, I know it's like an offhanded comment, but the former PepsiCo chief executive was here, and she was joking that she can't get room service because actually her hotel didn't have enough staff because a lot of people went back to Europe.
Yeah, no, I mean, it's there in the data. I mean, in the talk I gave yesterday on Brexit, or 2 days ago on Brexit, you know, you can just take the ONS data and the growth, you've got shrinkage in the foreign-born population and therefore in the foreign-born workforce as opposed to year after year after year growth. So that's a Brexit effect. And then compounding it on food, even before Ukraine, there were Brexit effects on ability to purchase foreign food, ability to get the crops in the UK. So if you're not like the US in messing up, but you are like the US in wage data, it's very clearly a labor supply effect through Brexit.
So it is a further hike in rate. We have 3 from the BOE already.
Right.
How many more do they need to hike to tackle that inflation? Is that the prescription? And does the BOE have to accept that the UK falls into some form of recession, even if mild, to get that down?
I fear that they may have to have a recession, or the UK will have to accept the recession to get it down. I mean, this is the problem. When you have a labor inflexibility, a labor supply shortfall, you have to somehow get the demand to match up with the available labor. And if you don't do anything on the monetary front, then wages keep rising, but real incomes don't. And that's what you ultimately care about. The reason you care about inflation is you care about people's real incomes.
Yes.
And so in terms of hikes, I would take the over. I think 3 hikes to now plus a couple more is probably not going to be quite enough. And I think the Bank of England's, or the MPC rather's, forecasts as presented emphasize the real income shock will push down inflation. You may get a real income shock, but that doesn't push down inflation in itself. That's why you need tightening.
But I mean, the real also problem is that you create a divergence of the people, you know, the have and the have-nots. So is there fiscal policy that can actually help? I mean, if you speak to France, and I was there covering the election,
right,
they think it's incredible, you know, how few safety nets socially the UK has.
And I think that's historically a long-term problem, a long-term issue. I mean, so you come back from World War II in the 40s, the UK puts in the welfare state, National Health Service, all these things, but has done very little to expand the welfare state since then. And there have been very specific problems, cutbacks in the NHS, cutbacks for poor families, cutbacks for children over the last few governments. And that's a choice. It's a political choice. It's not the choice I would make. The UK can afford to do more for the have-nots through fiscal policy. And it doesn't even have to be expansionary fiscal policy. You just need to reorient who gets the money out of the government.
Adam, as always, thank you so much for joining us. Adam Posen, the president of the Peterson Institute for Economics, joining us here in London.
And coming up, we're going to dive into deep fakes, just one part of how artificial intelligence is changing our lives. Don't miss our conversation with the CEO of Synthesia next. This is Bloomberg.
has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the European Market Open this Friday morning. I am Tom Mackenzie, alongside Francine Lacqua.
So that was me, but it also
Was it?
It also wasn't me.
Wait, I love the voice.
Yeah, do you prefer that voice? Shall we swap that up? We have to explain this. We have to explain this. That was a deep fake we played for you. A deep fake. It was made by Synthesia. We have the CEO on set. They are a company that make AI-generated videos. Its first commercial product launched in 2020. They've raised $50 million. I think Francine prefers the deep fake to the reality. I don't blame you.
It was a very smooth voice. It was a very smooth deep fake.
There was a caramel essence to the voice, wasn't there?
It was quite special. I mean, this is a big company.
This is huge. These guys are leaders in the space. They've raised a lot of money, including from Google Ventures, Alphabet's venture capital arm, of course. And as I said, we're joined by the CEO of Synthesia, Victor Ripabelli, on set. Victor, talk to us about the applications. Why do we need deepfakes like that within the commercial space? What do you use this for?
Yeah, so thanks for having me. What we're seeing in the online world today is that video and audio is becoming the default for everything that we do, right? And that causes a big problem for companies because recording video with cameras, studios, film crews, all this type of stuff that we're in here right now in the studio, it's just incredibly time-consuming, it's expensive, and it doesn't really scale.
Wait, don't tell our bosses that. You're going to force us out of our jobs. Carry on.
But what we're seeing here is actually not so much about replacing video production, it's about replacing text, right? So our customers use this for training in big corporations. Think, big fast food company, for example, needs to train hundreds of thousands of employees every single year. Instead of having that done in PDFs and slide decks, now you can make video, which is a much better format for communicating with people in 2022.
With this caramel voice, Victor, you've literally made my day, if not my week, by seeing that deep fake. Also, guys, breaking news, my Tom Mackenzie can speak Spanish. Can we have a look at that deep fake?
Bienvenidos a European Market Open esta mañana de viernes. Soy Tom Mackenzie, junto a Francine Lacqua.
Gracias, Tom, for that perfect Spanish. Tom does not speak Spanish, so I'm so impressed.
Well, it's a bit. I mean, I can say, can I have a ham sandwich? Where is a beer? Where's the beach? But that is
amazing.
Now I have that new skill set, and Victor can just program me in. He can improve my Mandarin Chinese, which is okay. It could be better. We can add Italian so that we can finally chat, conversely, within your native language.
The problem is authenticity, right? So this is great. I mean, if you use it for, and we all have these compliance, of course, university things that we need to do for work. So is it the most demand coming from that, or is actually chief executive saying, I need to speak to my staff, but I don't have time to record a video?
I'd say that what we're seeing today is very much about training, internal communications. It's not trying to pretend that it's a real video. It is very, very simply about the utility, right? If you are someone who is a frontline worker, for example, in a big corporation, and you need to learn something, as the learner, you want to consume that via video because you're used to watching YouTube and TikTok videos when you're not at work. And as the company, right, you want to make sure that your employees are trained as fast as possible and as most efficient way as possible. And this just provides a solution for that because this is something everyone can do, right? So this is not video producers who are using this technology. It's learning instructors, business analysts. If you can make a PowerPoint slide, you can make a video like this. You literally just type it out.
Victor, would you advocate for regulation in this space to avoid some of the fears, to address some of those deep-seated fears?
Yeah, look, I think it'd be naive to think that these technologies are not going to be used by bad actors, right? Bad actors have used everything from cars to emails to smartphones, and they will also pick up this technology. I think for a lot of the kind of bad use cases today, we are covered legally, right? If I impersonate you in an email, for example, or fake a physical letter from one of you, then that's bad, right? And I'd get sent to prison for that. But I definitely think that we should think about if we should punish these kinds of crimes even harder if they're using technologies like this. Absolutely.
Yeah, I mean, I don't know if you do get sent to prison, or certainly not in the UK, but actually what do you do with the data? So, you know, Tom, the way it worked, so Tom recorded basically himself, and I think it was a green screen, so this has kind of worked. And so you now have this data, and you have this image, and beautiful voice for Tom McKenzie. I mean, do you then delete it? Do you have it? Do you store it somewhere for use afterwards?
Yes, we store it safely. We have thousands of people who have their own AI avatar with us today. I think we're creating around 50 of these every single week. And of course, if you don't want to have your AI avatar anymore, we'll delete all the data, right? But this is like any other service you use online. Obviously, we store it securely. It's password protected, and we're building all these kind of safeguards so no one else can use it, right? It's a private login that you have for your own avatar. So you're always in control of your data and of your avatar.
Is there a secret actually to, so, I mean, this was pretty convincing. I mean, I know Tom Spanish, so I wasn't, you know, fooled. But is there a secret if you Is there a trick where I'm looking at that video that tells me it's fake?
I think if you look at the videos today, they're not there in terms of being 100% like a real video.
Yeah.
That is a matter of time. But the best in class technologies are definitely in private companies today, right? And they will remain so. So I think you should always be vigilant. One of the most important things about all this new era of content creation that's going to be driven by AI as opposed to cameras and microphones, it's going to be vigilant. Just like you've been able to fake emails or tweets or letters, or anything really for the last many 100 years, it's now going to be possible to also fake video and audio outside of Hollywood as well, right? So I think the most important thing here is education. It's really inoculating the population that this is now possible. And I actually think the most effective way of doing that is that people watch these training videos. You can do lots of things with this type of video you can't do with normal video, right? Like,
Victor, before we let you go, how is demand changing and what's happening on the funding front? Are you raising additional funds?
We're not raising additional funds right now. We're very well capitalized. We're growing really, really fast. And I think it's just very clear there's a force of nature out there in the market. People want this technology, and they want it really, really bad. And it's for very kind of boring vanilla use cases where it just has huge utility in these big companies.
Well, I would love to dance as a ballerina. I don't know if you can do that next. So
Yes,
not only audio.
years.
There you go. Ballerina, Francine, next.
We'll revisit this.
Victor, thank you so much. Because it's just too enjoyable, let's wrap this up with some more virtual Tom McKenzie.
Thank you, Francine. That was my creator, Victor Riparbelli, the CEO of Synthesia.
For the record, Francine definitely prefers the avatar of the deepfake. Thank you, Victor Riparbelli, CEO of Synthesia, for providing the deepfakes for us this morning. And for joining us,
thank you.
Of course, on that story. Let's get to the Bloomberg First Word News now with Laura Wright. Laura.
Sadly, I didn't get an avatar creation, but I'm here in person. President Biden is seeking an additional $33 billion in aid for Ukraine and new authority from Congress to seize and sell property from Russian oligarchs. Meanwhile, it's reported a British national has been killed in Ukraine and a second person is missing. Scott Sibley was believed to be fighting with Ukrainian forces in either Mariupol or elsewhere in Donbass. British Virgin Islands Premier Andrew Fahey has been arrested in Miami. The criminal complaint issued by the Florida court alleges he was trying to help a presumed drug trafficking organization smuggle thousands of kilos of Colombian cocaine through the United Kingdom territory and into the United States. The mayor of Kyiv says authorities still can't guarantee safety to residents hoping to return after Russian forces pulled back from the outskirts of Ukraine's capital. Klitschko told Bloomberg Television the exodus of businesses and people has already caused a hit of at least $1 billion to the city's budget.
This war, senseless war, is genocide of Ukrainian population because our city is destroyed. I'm talking about Mariupol, Kharkiv, Chernihiv, Bucha, Gostomel, Irpin, and other cities which actually destroyed, and it's big drama.
Global news 24 hours a day on air and a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
All right, in London. Now, coming up, draining Twitter of crypto scams. That's what Elon Musk has to do when he buys a company. That's according to Bloomberg opinion columnist Lionel Laurent. We speak to Lionel, talk about crypto. We also talk about deep fakes. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We are 52 minutes into the European trading day. Solid gains across the European equities, gains of more than 1%. The Politburo of China juicing the markets over in China, and that read across is being felt in these equities. The Politburo saying they are determined to meet their growth targets. Every single sector, bar two, in the green this morning. Francine.
Now, as Elon Musk gets ready to take over Twitter, he has another big job ahead, and that's draining it of digital currency scams that plague it and other social media platforms. That's the latest conclusion of Bloomberg opinion columnist Lionel Laurent. Well, Lionel now joins us for our Paris bureau. Thank you so much, Lionel, for joining us. It's a great piece because actually I hadn't thought about the crypto angle too much, but it's also very true that Elon Musk is constantly tweeting with crypto bros, with, for example, the founder of Dogecoin. Is there going to be any want from Elon Musk to crack down on that?
Yeah, you raised the central contradiction or the dilemma because Elon Musk presents himself as the firefighter. He said that he does want to clean Twitter up in terms of the crypto scams and frauds that pervade the platform. He's also a bit of an arsonist himself because he uses Twitter. He's very vocal. He's been really throughout COVID dabbling in all sorts of crypto tweets that move the price of Bitcoin and Dogecoin as well. So he definitely has a kind of personal dilemma. And just to kind of frame the problem, remember that during COVID, we saw a festival of frauds and scams online on social media. There's been a boom in frauds reported via social media. So this is a clear problem. This is a problem that regulators are looking at. So I think Musk really has no choice but to address it. The question, as you say, is whether he can, at which point that hurts revenue, as well as having to invest in the cost of the cleanup.
A festival of fraud, as you put it, and now you're describing it potentially as a crypto Twitter. Leonard, what do regulators and what will they be looking at specifically? What are the kind of measures they could be rolling out, and how much are they going to be scrutinizing Musk at this point?
So part of this is going to be about platform responsibility. And during the last sort of crypto ICO boom, we did see platforms wake up, because when you have the SEC suing influencers on your platform, you can't really ignore that. So they've restricted a lot of crypto ads. I think this time around, though, because there's been such a boom during COVID, regulators are knocking once again on the door of social media platforms. In the UK, there is a new legislation that's being extended to social media platforms to make them responsible for fraudulent ads. And in Europe, the ECB's Fabio Panetta was talking about social media more generally as a kind of feeder of hype and the fear of missing out, taking advantage of unsophisticated people in trading crypto more broadly. So there's clearly a lot for regulators to think and worry about, and I think a lot for social media platforms to get ahead of in terms of responsibility before it gets out of hand.
Yes, first of all, is there regulation coming, and how does it affect Twitter overall?
Well, I think this is the question, because right now regulators are clearly behind the curve, or feel behind the curve, on crypto more generally. Again, I think if you look at the share price of Twitter next to a lot of the other kind of meme stocks and stocks that benefited during COVID, there is a kind of intersection of addictive trading, addictive social media. I don't think we can get away from that. So I think that Musk clearly wants to take advantage of the deflation of this bubble a bit, buy Twitter, maybe change the model a bit, but he is clearly thinking of crypto as a revenue opportunity too. So the more he moves into this market, the more he will overlap, I think, with regulatory worries.
Okay, the central contradiction for Elon Musk as he looks to take over Twitter. Thank you, Bloomberg opinion columnist Leonard Laurent. Interesting to see that Goldman Sachs now offering a loan, at least to one customer, collateralized by their crypto holdings.
Yeah,
so,
actually, I have a fashion designer, a pretty loud fashion designer, who also opened a pop-up store where you could, in London last night, where you can now pay in crypto.
It's becoming more mainstream, isn't it? Even as the price remains slightly modest in terms of the price rises we've seen versus last year. The futures stateside, you're looking at losses of 0.3% on the S&P. Eamon, he's digesting the warnings from Amazon and Alpol. Stay with us. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
You always have to be take a look, and no one is predicting a recession now. They're predicting, or some are predicting, there may be a recession in 2023.
I want to acknowledge the challenges we are seeing from supply chain disruptions driven by both COVID and silicon shortages to the devastation from the war in Ukraine. We are not immune to these challenges, but we have great confidence in our teams, in our products and services, and in our strategy.
There's no indicators that we're seeing of weakness in consumer demand, but we're wary of it, as probably all companies are.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Failing to deliver, Amazon posts a surprise loss as Apple warns supply constraints will hit revenue both slump in after-hours trading. Stock sale, Elon Musk offloads $4 billion of Tesla stock to help fund his blockbuster Twitter deal. And bowing to King Dollar while China's yuan heads for a record monthly decline against the greenback, Bloomberg Economics slashes the nation's growth forecast. Now, we have a packed show, but first thing is first, let's check on the markets because it's an interesting dynamic that we're seeing with the European stocks getting some 1%, technology also on drop. So in the U.S. yesterday, we had a lot of these technology stocks down. Apple disappointed. We also heard from Amazon, they disappointed in terms of guidance, not actually of sales for the quarter. But what Europe is looking at is actually the fact that Beijing could crack down less on some of the technology stocks. So that's giving a lift, or gave a lift in Asia, and that's filtering through to Europe. If you look at the NASDAQ futures, they're still down some 0.6%. And Bitcoin, always look at Bitcoin, also because we had a great roundup with Lionel Laurent on crypto. And of course, Elon Musk buying Twitter, what that means, 39,613. Now, the other, of course, big story that we're watching is possible gas, with a lot of these countries trying to figure out what they do if there is a gas embargo from Russia. Here in the UK, we look at inflation, gaining some 0.3%. The CAC 40, 1% higher. If you look at the industry groups, actually most of them are gaining. I think there's only one that's down some 0.3%. The DAX and the FTSE MIB also gaining around 1%. Now let's start with those tech news. Well, Elon Musk has sold about $4 billion worth of Tesla stock after clinching a blockbuster $44 billion deal to buy Twitter. Meanwhile, it's been a huge week for tech earnings. Here's what some of the chief executives have been saying.
There's no indicators that we're seeing of weakness in consumer demand, but we're wary of it, as probably all companies are, because household budgets are tightened.
I want to acknowledge the challenges we are seeing from supply chain disruptions driven by both COVID and silicon shortages to the devastation from the war in Ukraine. We are not immune to these challenges, but we have great confidence in our teams, in our products and services, and in our strategy.
we still have more demand than supply. We are now not the main constraint, we're supply constraint. And especially for the company, which is now part of the digital transformation trends they see in enterprise, and that's driving a lot of growth in our IoT business, in addition to auto and handsets.
Well, with a wrap of big tech earnings, we're now joined by Bloomberg's Laura Wright. So, Laura, what's the latest with Elon Musk, Apple, and Amazon? I mean, there's a lot going on. They, of course, each have their individual stories.
A lot going on. Well, Elon Musk keeping us on our toes. Tesla resilient up in the pre-market in spite of news that Elon Musk will be selling 4.4 million shares in order to fund his acquisition of Twitter. Note the Twitter share price unchanged, $49 in the pre-market. It's still below that magic offer number for shareholders, $54.20. But for some shareholders of Tesla, they were frustrated because it implies a lack of conviction in Tesla stock from Elon Musk. Dan Ives over at Wedbush stating that this purchase of Twitter has become an albatross around Tesla stock. But Elon Musk trying to assuage some concern on his favorite social media platform, responding to one tweet that he has no plans to sell more Tesla stock. Now, Apple, the world's most valuable company, reported after the bell, and it was supply chain headwinds in focus because of rolling lockdowns in China, inflation, the war in Ukraine. Apple down almost 2% in the pre-market, and that was most visible really in iPad sales, in marginal negative revenue growth year over year because they were unable to get all of the parts that they needed. But breaking down the business elsewhere, it was a beat for iPhones, robust demand for Macs, and a record for services as Apple pushes more aggressively into that services ecosystem. They're pushing out content on their Apple TV Plus streaming platform. At Amazon, the story, it was increasing costs, and that led to a surprise loss for the last quarter and a projected loss for the following quarter. Amazon, they were ramping up their deliveries, their warehouses, employees over the pandemic, but we are now seeing signs of falling revenue growth. Actually, the smallest revenue growth since all the way back in 2001 as consumers' discretionary income under pressure for inflation. But Amazon Web Services, Francine, it's the one bright spot, the cloud business, beating the Street's forecast up 37% year over year.
Yeah, I mean, it's still a monster of a company, Laura. Thank you so much. But Amazon, of course, saying that revenue from the main e-commerce business declined 3% on the quarter. Let's also look at what is happening pre-market, because it really says all of the story. Amazon, I think, down some 9% in pre-market. The reality, of course, of this will weigh on revenue and profit going forward. Consumers returning to their pre-pandemic habits, I imagine, and inflation may also cool some of their spending. Now, we're now joined by Mark Hayflay, Chief Investment Officer at UBS Global Wealth Management. Mark, are you good morning, first of all, and then I was going to ask you whether you were continuing spending on Amazon or whether you've gone back to the shops, because this, of course, would change your portfolio.
Well, we're certainly seeing a lot of the shift from these goods to the services when we look through. Of course, we look at card data and other things. And that is important because that can help reduce some of these pandemic-related inflation problems that we're having.
Mark, what does it mean in terms of inflation? There's, do you still think that monetary policy is actually behind the curve because inflation is stronger and it will just get higher if not dealt with? Or could we see a dip towards the end of the year?
Well, monetary policy, at a quarter point with the Fed, yeah, they're behind the curve. And they may end the year behind the curve. But, the market went to pricing in the Fed ending the year at something like 2.8%. It really ramped up very quickly. So that was a shock to the system. And then we've had the four horsemen of the apocalypse running roughshod over all the headlines this week, literally famine, war, death, pestilence. I mean, so it's been, the sentiment has been terrible this week. But then if as we believe, you start to see some of these inflation pressures coming off, and it looks like the Fed has a little bit more room to maneuver, then I think some of this sentiment can lift, that maybe there still is a chance that the Fed can engineer a more normal growth trajectory and inflation trajectory.
But Mark, and I understand what the market is looking at, but you're absolutely right. I mean, we're looking at war, we're looking at famine, we're talking, about social upheaval. What is the market not seeing? I know it's cheap money. I know that, there's no alternative, Tina, but actually, when does this change? When are we going to see a correction?
Well, I think one of the things that absolutely has to change is, the Fed, what's priced in, that has to be, it can't get any worse from here. We also need to find a point where we're at the peak of the sanctions in Europe and the peak of this, not necessarily that this tragedy of ongoing war ends, but that the news around rising energy costs and commodity costs, we get some stability there. So I think those are some of the factors that we would need to see to kind of turn around some of this sentiment. But what the market's missing, though, is some of these things that are being said around, the consumers remaining strong and that money still flowing into a robust economy.
Mark, where do you see the most value? I know there's quite a lot of going on in some of the sectors, in technology, valuations that are expensive or priced to perfection could have a tough time. So what do you tell your clients they should be invested in?
Yeah, well, we've had this very low inflation, lower for longer, where the tech stocks and the growth stocks have done so well. And I think at this point, and watching the show this morning, the headlines are technology, 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 and that's fair enough. But we're really focused now. What if this inflation is not necessarily going to continue to skyrocket, but remains above the trend that we had before the pandemic? That's a different regime, and in that regime, we're really looking more towards value stocks performing, closing some of this gap with the growth stocks. And so we've been focused more on value, looking across countries, across sectors, looking for better cash flow yield, free cash flow yield. That gives companies the opportunity to do buybacks and other things and keep earnings moving forward.
All right, Mark, thanks so much. We'll talk a lot more about inventories and, of course, some of the earnings going forward with Mark Hayflay, Chief Investment Officer at UBS Wealth Management. Coming up, China's growth outlook is deteriorating sharply amid lockdowns in Shanghai and elsewhere. We'll get to the latest on that next. This is Bloomberg.
Of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
What the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China's growth outlook is deteriorating sharply amid lockdowns in Shanghai and elsewhere. But Bloomberg Economics' new base case has the government sticking with its COVID-0 strategy, which will slow growth for the year to 3.6%. Let's get more with our chief Asia economics correspondent, Enda Curran. And at the same time, first of all, good morning or good afternoon to you. But the Politburo over in China really ignited this market rally earlier on, by pledging actually less cracking down on tech, but also supporting growth.
Well, that's right, Francine. That statement from the Politburo came out around midday here. That's unusual. Normally we get a readout in the evening time. It might come on evening news. But it came in midday, and that's been seen as a deliberate attempt to try and stoke the markets. The statement basically said that the government is now going to turn towards supporting the economy with some urgency. They highlighted the need to iron out supply chain problems. They spoke of the need to address positively complaints from foreign businesses operating in China. And they basically said that there's going to be more support on the way. Now, there was nothing new in terms of specifics. The statement itself wasn't a major surprise, but it does show authorities are focused now on growth. Importantly, though, the statement also reaffirmed a commitment to COVID-0. Now, that's what a lot of economists are asking this afternoon. How can they really achieve this growth turnaround that they're talking about while also pushing through with these aggressive ongoing lockdowns?
And thank you so much, Enda Curran there in Hong Kong with the very latest on China. Now we're back with Mark Hayflay, Chief Investment Officer at UBS Global Wealth Management. Mark, how do you play China right now? I know, you like some of the stocks, including healthcare. I think you want more exposure to value, energy, and some of the defensive stocks. What do you do with fixed income in China?
Well, it's not really one of our overweights right now. I think, the announcements have helped, and where we're seeing the opportunity is in some of the, as you said, the value names and healthcare and longer term opportunities. But we need a little bit more than announcements right now. We need to see some of these things taking root a bit because we have these ongoing lockdowns and pronouncements that rightly or probably rightly, China is emphasizing health over growth in the immediate term. So until that turns, investors should expect some choppiness.
What kind of choppiness? I mean, what does it mean in terms of, do you have to protect yourself against inflation, or do you buy into the choppiness?
What it means is that time and again, we've seen very large sell-offs in China, and we've seen the government come in over time, maybe have a few false steps, but eventually take pragmatic and practical steps to get it right and get growth back on track and to see the stock market come back. And we think we're in that process, but we don't know if we're at liftoff point or still trading around the bottom of that. So that's why we'd like to see a few more signs first before we say this is one of our overweights globally.
So what kind of signs, Mark? And is that a protracted trend that you need to see before you buy into it?
The main one right now is a sense that the COVID measures that are impacting growth, that are impacting exports from China, are starting to recede. Now, they never look like they will, and then they do. But I think getting a little more handle on that right now is crucial for global investors to really start to dig in on China.
Mark, what do you do with Europe right now? I mean, it's really at the crossroads of everything almost that could go wrong, but valuations are cheaper than elsewhere.
Well, a lot of this, as you just said, has come through in the euro, which is at a 5-year low versus the dollar. And of course, that makes the earnings better for European companies. So I think that you can't forget the currency where you're seeing this impact. But again, just playing Europe to play Europe is not the way that we would do it. We would focus on the value, also, more defensive sectors like healthcare is a little bit of a hedge here to get through this very challenging geopolitical environment.
Mark, anything with crypto, or what's your most outlandish call right now?
Well, crypto is a bridge too far, I think, right now for us. And I think it's, part of this wider complex in question now. If we've moved to a new regime where we are more focused on inflation, do the more growthy things, the frothy things that did so well, will it start to come back? We're making a bet that you want to shift your focus. You want to be more balanced and focus more on things like free cash flow. And last time I looked, there wasn't a lot of free cash flow in Bitcoin.
So what part of your portfolio do you not invest and go to cash?
It's, it's very small amounts. It, of course, depends on whether you're a growth investor or a conservative investor. But every day, I think the main message is people are so focused on, will there be a recession? That's a possibility for the future. But the clear and present danger is this inflation that people are dealing with every day. And so where we find companies have earnings in nominal currency, those, there's nominal growth there and there's real growth there. That is a store of value for these kind of uncertain times that you're not necessarily going to find just by staring at something that is in your bank account and has eroding value.
Mark, as always, thanks so much for joining us. Mark Hayflay there, Chief Investment Officer at UBS Global Wealth Management. Now, coming up, President Joe Biden seeks $33 billion for an aid package for Ukraine. We'll have the latest on that next. And this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now let's get to one of our other top stories. President Biden asking Congress to provide a further $33 billion in additional military, economic, and humanitarian aid to Ukraine. For more, we go to our European correspondent, Maria Tadeo in Brussels with the French accent. Maria, what are Biden's plans for this latest aid package?
Yes, Francine, and it would be a monster package. You're talking about more than $30 billion that would go into this. Of course, $20 billion would go into military aid for Ukraine. This is the #1 need for the country. President Zelensky repeats this all the time. It's weapons, weapons, weapons. And then, of course, you would have another 13 that would go into economic and humanitarian aid for the country. It is significant because it would be the single largest military donation for the country, but it's also important from a symbolic perspective, Francine, because it does show that the United States is growing increasingly convinced that Ukraine can win the war, but also makes good on that promise from the U.S. administration. Remember, Tony Blinken was in Kyiv at the start of the week, and they said, we will accompany Ukraine every step of the way until final success is completed. All of this, Francine, of course, coming at a time in which there's fears that this could escalate beyond Ukraine, possibly Moldova. There's a lot of tension in that area, too, ahead of that Victory Day parade on May 9th in Russia, Francine.
Yeah, and Maria, this could last for years. Is this what officials on the ground are also telling you?
Well, Francine, right now it's very difficult, as you know, to put a date on this. But yes, European officials are prepping themselves for a war that could go all the way until the end of the year. So potentially the entire year at war before that peace settlement is agreed. For the time being, no one sees an incentive to get into a peace deal. They believe, and they have become very aware, that both Russia and Ukraine are waiting for the outcome of the Donbass battle. And of course, there is no diplomatic channel for the time being with Vladimir Putin. Emmanuel Macron is no longer on the phone with him. So that relationship has gone very cold. I would also point to the words yesterday from one of the presidential advisors to Zelensky, Arestovich, who went on TV and said, we see a battle that goes on the attack from June and, yes, potentially until the new year.
And Maria, when Vladimir Putin asks for rubles to pay for gas, Europe is still scrambling. They don't have a united front. What will happen?
Francine, to be very honest with you, no one has any idea here. The guidance the Commission says is very clear, but of course, when you speak to the companies like we have today the entire morning, they say they don't actually get it. For the time being, the Commission says just pay in euros. That is a deal. You send that deposited money that would finalize the transactions, but nonetheless also issue a warning saying be aware of risk of sanctions being in breach. For a European company today, it is very difficult to navigate this. On top of this, Francine, just to make it more difficult and complicated, there's the idea that an oil embargo or some type of sanction is coming on Russia.
Thank you so much. Our Europe correspondent there, Maria Tadeo, reporting live from Brussels. Coming up, the store of the future. We'll be joined by German fashion designer Philip Plain to discuss crypto. It's not going to be dull. Join us.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are the balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Failing to deliver, Amazon posts a surprise loss as Apple warns supply constraints will hit revenue. Both slump in after-hours trading. Stock sale. Well, Elon Musk offloads $4 billion of Tesla stock to help fund his blockbuster Twitter deal. And bowing to King Dollar, China's yuan heads for a record monthly decline against a greenback. Bloomberg Economics slashes the nation's growth forecast. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So first thing is first, we'll talk about crypto and fashion in a second, but I'm quite excited about the markets as well because we're seeing a bit of support when it comes to China, and this is not only China supporting in terms of economic growth, but also China maybe not cracking down as much on some of the technology stocks, and that's filtering through European stocks. You can see 1% higher. And then Bitcoin. We always watch Bitcoin. Is it a hedge against inflation? We have a famous fashion designer who also is now accepting crypto in his stores in London. He's Philip Plain, and we'll get to him in a second. So Bitcoin, 39,522. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Germany's Vice Chancellor says the country won't block an EU oil embargo against Russia. Robert Habeck says Europe's biggest economy could also handle a complete energy cutoff. But he made clear he's skeptical about an oil embargo, arguing it would allow Russia to sell crude to other countries for an even higher price. British Virgin Islands Premier Andrew Fahey has been arrested in Miami. The criminal complaint issued by the Florida court alleges he was trying to help a presumed drug trafficking organization smuggle thousands of kilos of Colombian cocaine through the United Kingdom territory and into the United States. The mayor of Kyiv says authorities still can't guarantee safety to residents hoping to return after Russian forces pulled back from the outskirts of Ukraine's capital. Klitschko told Bloomberg Television the exodus of businesses and people has already caused a hit of at least $1 billion to the city's budget. Global news 24 hours a day on air and a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Now, last night, German fashion designer Philip Plain opened his flagship crypto concept store on Old Bond Street in London. It was cool. I heard the glitz and the glamour was there. Dubbed the store of the future by the brand, Philip Plain claims to twist classical shopping with the meta world, while QR codes show different crypto prices under products, and the shop is also home to an NFT museum. Well, Philip Plain joins us now. Philip, thank you so much for joining us. I mean, this is so exciting. Actually, the newsroom was really buzzing because you're the first one to do it, and you've chosen London as a destination to see if it works. You roll it out elsewhere.
Exactly.
So, I mean, who are you targeting? Is it a different kind of audience that wants to pay in crypto?
So, yeah, I mean, we are targeting, first of all, our community. We are targeting our clients. And then, of course, we also saw that there's a big interest from the crypto community itself, because it's still a small community, but it's a community which is really interested in everything what's going on. And so we gained a lot of new clients, because I have to say that we started actually to accept crypto already last year in August online.
Oh, and that's helped with clients. So new clients that weren't buying some of your leather jacket. I mean, I was looking online, a leather jacket, beautiful, £9,000. So I imagine the number of customers that can afford that is quite limited.
Yeah, I mean, we are a luxury brand. We are definitely a luxury brand with a target group of luxury consumers.
Yeah.
But last year in August, you know, we were probably the first luxury fashion brand who started to accept crypto online.
Yeah.
And so this was more like an experiment in the very beginning, right? And then from the first day on, we saw how many people were engaging, and that was very overwhelming. And so we decided to roll it out also in the stores.
So how are these clients different to others? Is it the same, is it the same celebrities or people that used to buy, or is it a younger crowd? Is it a cooler crowd? Is it, from certain parts of the world?
Well, obviously, it's global. Definitely, it's global. So we have everyday crypto transactions coming in through our website. And we have all kind of age groups. I have to be very frank with you, very honest. And it's very hard to cluster the clients. There's a lot of small transactions, and you have also some very big transactions done with crypto. We accept 25 different currencies. 25 different. So we're targeting all the crypto holders.
I mean, volatile currencies. So how do you price them?
That is the big challenge, Yeah. So yesterday on Bond Street, I looked out the window and I saw all these major billion-dollar brands around us. We are probably the smallest brand on the block, the new kid on the block. But and then you ask yourself why nobody is yet really out there accepting crypto, in the stores or on the website, because there's a few obstacles you have to overcome. And me and my team, we hired developers in-house. We developed our own solutions. So yes, you're right. The currency is changing all the time.
Yeah, Bitcoin. So, it goes from like 30 to 55
Ethereum,
to 40.
Exactly. I mean, in the morning the shoe is more expensive, and the evening is cheaper, right? Or it can even change in an hour. So every 10 minutes we update the exchange rate online and in the stores, and that is
But Philip,
exciting.
for you, is this not a nightmare? Because actually you don't know how much you can have at the end of the day. I mean, you could have a really good day or a really bad day, and it's completely out of your hands.
Well, so first of all, what we want to make sure is that you pay, as a consumer, the right price at the moment. So that's why every 10 minutes we exchange or update the exchange rate. So when you make your purchase, we make sure that you pay at the current price, number one. Then number two is we keep crypto. So that's a decision which I made. I'm the sole owner of the company.
So you're not trading.
So we're not trading it. We keep everything. So everything what we make, we keep it in crypto. First of all. Second of all,
what crypto? Bitcoin, or do you just have different wallets?
We have different wallets. I mean, I personally hold some Bitcoin. Even my mom has Bitcoin. I mean, she's 67, and she's like.
Wait, did she get into crypto, or the other way around?
I think we started at the same time.
That's amazing.
Yeah.
And so she's not a day trader, is she?
You have two different kind of crypto. In my vision, you have two different kind of crypto users. You have the users and abusers. Okay? The users are the people who really use it in a daily life. They're buying things, they're selling things. And the abusers, the ones who are just trading to make profit. My mother is an abuser. She doesn't know how to use crypto in the daily life. She owns crypto, but she doesn't know how to use it. She doesn't have a wallet, a hot wallet.
But she trades? No, she doesn't trade.
Well, she is a holder.
Okay, she's going to be my next guest on the show.
She's a holder.
Talk to me a little bit about some of the clients. So do you have a lot of Russian clients?
Well, at the moment, no.
Okay.
At the moment, no, and because we suspended most of our services in Russia, even though we have an office there, many people, and it's a very difficult question also, and a difficult situation. But we have clients from all over the world. I mean, there are countries where we're not allowed to sell our products in crypto, right?
Such as?
Well, for example, Russia. You're not allowed to do business there in crypto. And England is very important because we all know that England just announced a couple of weeks ago that they want to become a crypto hub in Europe. And so I thought that's a great moment to open the first crypto concept store in London.
What will be your revenue from crypto in 2022?
We did last year online 100 million euro turnover, online only. And we started...
For crypto, right? Online?
No, we did 100 million overall.
Yeah.
Online turnover, and crypto did about 3% in 6 months. I think that this year, also considering that we will make it accessible in over 100 stores, we will do 15 to 20 million euro with crypto itself. So it's still small, but it's very exciting. And then there's also the NFT business, because we are also selling NFTs very successfully. And that is also very innovative. It's not just that we are accepting crypto in the store, we're also selling NFTs in the store to people who never owned an NFT. And
what kind of NFTs? So is it with celebrity? I mean, we had a famous tennis player who did an NFT of the moment he won Wimbledon.
Okay.
I mean, do you actually make the coins, or do you buy NFTs and then sell them on?
No. We created our own NFT brand, which is called Crypto Kings. So it's me, myself, and a very famous NFT artist from Germany, Untitled. And so we created together a duo. We are creating our own NFTs, which are obviously linked mostly to fashion. And so my vision or my idea was, my mission was to sell my mother an NFT. My mother, as I said, 67, she never has an NFT, bought an NFT, and she, if I ask my mother, do you want to have an NFT? She says, no, I want to have a Chanel bag, or I want to have a Philipp Plein bag, okay? So the idea is to link a physical product to an NFT.
Yeah.
So when you buy at Philipp Plein a bag, you get an NFT on top. It's for free, it's already inside the price. So automatically, I make you become a collector. Because when you buy just a bag in a store, you're an owner of a bag. But owning an NFT on top, you became a collector.
But if, I become a collector, does it also help with authenticity?
Of course. In a certain way, yes, clear. But in the first place, yeah? But if you want to resell the bag, but you can trade the NFT afterwards, obviously. You can resell the NFT in the secondary market and maybe make money out of it.
I know you have a lot of clients that are actually, big celebrities from Hollywood, and it's amazing, actually, if you look at the crypto craze, how it's also filtering through to, I'm thinking of Orlando Bloom, Katy Perry. Do you think there's a link between Hollywood celebrities and this cool new crypto world?
Well, I think that a lot of celebrities, they can use their fame and their exposure to push NFTs and because Snoop Dogg is a big crypto and NFT supporter, right? And I'm a big fan of Snoop Dogg. He walked my shows. Yeah. His father walked my shows. His son walked my show. And Snoop Dogg is probably one of the Steve Aoki also. I don't know if you know. They are both big crypto holders and NFT holders, and this helps also us to expose our brand. Okay,
am I getting the tie-dye high tops or the leather jacket? What's in for the season?
It depends. I mean, you should wear the tie-dye high heels at the party in Saint-Tropez, and the leather jacket you're going to wear for a rock concert in Coachella.
There you go. Philipp, thank you so much for joining us.
Thank you.
Of course, the very latest on fashion at the crossroads of crypto. What a fun conversation. Coming up, Elon Musk offloads $4 billion of Tesla stock to help fund his blockbuster Twitter deal. We have that story and a wrap of Apple and Amazon earnings next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, Finance, Politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's return to those big tech stories. Elon Musk has sold about $4 billion worth of Tesla stock after clinching a blockbuster $44 billion deal to buy Twitter. Meanwhile, we also had earnings from Apple and Amazon, and both companies acknowledging the impact of COVID on their bottom lines. Well, joining us now is Bloomberg's Christina Aquino to cover the markets, Alex Webb from Bloomberg Quick Take for all things at tech. So thank you both. I just feel it's going to be a good conversation. Christina, when you look at markets being supported today by the fact that actually China could crack down less on tech stocks.
Absolutely, Francine. I think that really is helping sentiment. And of course, we also got some added lines from the Politburo pledging that they're going to be supporting the economy. I think this is really what investors had been waiting for, is that big signal from China that they're going to be doing something about this economic deceleration and also just the impact of the lockdowns, which we know the big tech sector is very, very worried about.
Yeah, and if you look at Amazon, so they haven't done badly, but actually going forward, people would rather go to the shops, I don't know why, instead of buying online.
We saw with any number of stocks that benefited from the lockdowns, food delivery, meal kit delivery, all these things benefited during the lockdowns. The preconditions to do well were probably never better. So it really oughtn't have come as a surprise that then they weren't doing as well as lockdowns eased. I think the thing that was a surprise is that Amazon traditionally has been pretty good at turning the spigot when it needs to, i.e. it spends cash to expand. The moment that expansion isn't there or it thinks it needs to generate some cash, it can do so quite quickly. What it's done now is it's accelerated at such a pace that it has a huge amount of overcapacity right now. And when it comes, and those are fixed costs. It's people and it's warehouses, so not as easy to turn that metaphorical spigot as before.
Yeah, so Alex, how much of it is it, and actually I'm going to ask the same question, Christina, how much of it is it actually, I can go to the shop, so I'm going to buy there instead of get on Amazon, but also inflation's up, I want to, hold tight, not spend too much money, so I'm going to cut down on some of that maybe useless shopping?
Well, it's part of that on the demand side. There are also more costs on the supply side because fuel costs are higher. So how are you getting this stuff all the way around the world? They're starting to ask in some cases for additional fees from their customers to cover some of those additional costs.
Yeah, useless shopping. I definitely needed that extra pair of toothbrushes sent from some godforsaken place in the world. Christina, are we still spending? I mean, this actually was one of the main themes for earnings.
Absolutely, Francine. And you can really tell the companies are worried about this, right? It's really all about a question of, can they still wield that pricing power that they did in the previous earnings season now that inflation is much higher and it's much clearer that it's becoming entrenched? And, I think there is a bit more worry about this situation. In the UK, certainly, we are facing quite the cost of living crisis. It's the most severe in at least decades. Yeah. And you can really see just in the guidance of some of these more consumer-focused companies, even if, some of them aren't necessarily doing too badly, they are guiding a bit more cautiously toward the future because of that consumer aspect. I mean, certainly I'm having to watch my Amazon spending because you're right, maybe I don't need that second pair of toothbrush because I still have one.
When I say toothbrush, but actually euphemism because I actually bought a trampoline or two during lockdown, which definitely has never been used.
Who hasn't bought a trampoline?
I mean, there you go. If anybody wants a trampoline, if you want a trampoline, I have one going for cheap. Alex, what can you tell us about Apple? So, I mean, there's also concerns actually about the Apple model going forward.
Yeah, it's quite interesting because actually we think about Amazon as saying they are really good at sort of turning that spigot. We mentioned before, Apple, very good at managing their supply chain. These two things they're both pretty good at, they had problems with. Apple could not get all the components or is unlikely to get all the components it needs in this coming quarter, particularly from China, because of those lockdowns. So as much as China might be making efforts to fix some of the economic growth they've got there, when it comes to the actual working of the economy, i.e. supplying these components, Apple can't get what it needs. And so it's quite a highly rated stock, 25, 26 times forward earnings. It's therefore being punished for any sort of wobble.
Yeah, I mean, my craziest person, I have so much crockery that I really don't need. I mean, it's just been a little bit out of control.
There is an important point to make actually with Amazon as well. With a lot of the conversation we talk about monopolies. There's a new, well, it's not a new word, but a new focus on monopsonies, i.e. the people who are the only buyers in the market from suppliers. So in the context of lockdowns, where was the main place that you could get stuff within a day or two? It was Amazon. And that meant that if you were trying to sell stuff, maybe you felt an obligation to go to Amazon. That is decreasing now, but it's something that antitrust police look at a lot.
Alex, I think the share price is also down some 9% in today's trading session. Talk to us a little bit, this is for Amazon, talk to us a little bit about Facebook. I mean, Facebook seems to, be holding up. out?
It's really, if you look at these valuation multiples, that Amazon was trading at 40 times forward earnings, Apple, as I said, 26, 27 times. Facebook was way down before it reported earnings at 12 times forward earnings. It's now jumped a little bit to 14 times. The expectations for Facebook were incredibly low. The expectations for Amazon and Apple were incredibly high. And that's why we see them, moving back, both of them, toward, or all three of them, towards the middle.
Yeah, Christina, overall, the markets, it's amazing, actually, how much volatility day in, day out we have, because and a lot of it is actually, tech and China, and they're the two kind of opposing forces that then tell you what kind of market day you're going to get.
Absolutely, Francine. And yeah, I think Alex makes a really good point just about the valuation story in equity markets generally, but also in particular tech stocks, because this was kind of the big year for tech in terms of really breaking it down into which companies have enough going for them without the support of a broad monetary policy, because that's all going away now, and which companies have less going for them in this sort of environment. And I think, yeah, now that the earnings season, we've had like two sets of earnings now for this year, really kind of showing, laying bare the potential weaknesses and the potential strengths of each company. And I think now investors are really evaluating more closely that valuation story. Is this company really worth what it's currently being priced at?
Yeah, but it's difficult actually to see what would replace Amazon. Don't tell me you didn't buy anything crazy in lockdown. I just don't believe you.
It depends. My wife is watching. No, I mean, I bought that. Of course, I spent something. The interesting competitor to Amazon is, of course, Shopify, which is like building out a product which lets brands have their own website and their own retail, but it's not still just a fraction the size of Amazon, even though it's making grounds quite quickly.
Alex, thank you so much. Bloomberg's Christina Kino and Alex Webb from Bloomberg. Quick take. Now coming up, Mercedes says it expects healthy returns on car sales this year. We've been talking to the chief executive, Ola Kalunis. That interview is next, and this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Mercedes-Benz said this week it expects healthy returns on car sales this year. The German luxury car maker is also navigating supply chain issues by raising the prices of its top-end models. Now, we've been speaking to the Mercedes chief executive, Ola Kalaniis.
We think that the semiconductor shortage situation will continue in this year, 2022. In our discussions with our supply partners, it should start to ease in the second half of this year, but it certainly will be with us for the whole year. And then 2023 should be at a better level.
How much more can you increase prices by?
Well, prices are made by the markets, obviously, but what is carrying our very strong performance at the moment are the very attractive products. We have a product portfolio, a lineup that is better than ever. So the demand situation for Mercedes-Benz is very, very strong. And that you could also see in our Q1 results with very strong pricing power.
So given supply troubles and, of course, there's unpredictable swings in commodity prices, how would you describe how challenging would you describe the current environment?
It is a very challenging business environment. It's three effects that mainly impact our operations. On the one hand, as we just discussed, shortages of semiconductors. Then we have new lockdowns in China, in Shanghai, but also in other places in China, which affects the business and also the supply chains in China, but also globally. And then, of course, the Ukraine war. So three challenges going on at the same time. Having said that, our underlying business is very strong. We have a full product pipeline. Our electrification offensive is at full steam. So it's a situation where you have a very, very strong underlying business, but facing a challenging business environment.
Europe, of course, remains in the grip, as you point out, of this energy supply crisis, Germany's dependence on Russian gas at the heart of it. What's at stake here for German industry in general?
Well, we work very closely with the German government in terms of what's going on here, and they're making thoughtful decisions. Germany can only be a strong partner and support partners if the economy is strong. So energy independence is a top priority now, and that is being worked on.
What kind of scenarios are you planning for? How do you think German industry would weather a supply shock, for example, if Russian gas is turned off?
I think we have a level of uncertainty. It's very difficult to say exactly what's going to happen. But what Germany and the German industry is doing is preparing and also diversifying. Any and every company does that, as do we. So I guess we're going to have to wait and see how the situation develops.
Well, that was the Mercedes-Benz chief executive, Ola Kalaniis, speaking about German luxury car makers' outlook. Now, this is a share price for Mercedes. They did come out with results, of course, last week, and the focus is on how some of these older legacy companies can actually catch up in the EV market and maybe take on Tesla. So you can see Mercedes gaining some 0.8% in today's trading session. Stocks in Europe rising. China's pledge to ramp up stimulus buoyed optimism here. We've also had some pretty strong earnings continuing to roll in. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Katie Lyons in New York, Anna Edwards here in London, and this is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
If you think about the broader macro environment, indeed, we have more challenges now.
This is a new macro regime, and the risk premium, I think, has to go up everywhere.
Talk to CEOs about their businesses. The economy is resilient and growing.
What is extraordinary about earnings season is that revenues are coming in pretty strong. What's not coming in strong is forward guidance.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kayleigh Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, April 29th. Our top stories today. Elon Musk moves to cover some of that $21 billion portion of the Twitter deal he personally guaranteed. He sells $4 billion worth of Tesla shares. Apple and Amazon are falling after surprising earnings reports. Supply chain issues and a slowdown in e-commerce sales are the problems. And China's Communist Party, the leaders ignite a market rally. Beijing promises to boost economic stimulus to spur growth. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kayleigh Lines over in New York. Matt Miller is off today. And Kayleigh, we are getting very different vibes when it comes to tech. The US tech story after hours not looking great, but the Chinese tech story much more positive.
Yeah, extremely positive, Anna. And again, you can thank the Politburo for that. Coming out overnight, pledging to support economic growth, even as it sticks with its COVID-0 policy. But just those words, promising to support the Chinese economy, gave a nice lift to sentiment in the overnight session. You had the CSI 300, that benchmark in China, higher by about 2.5%. But as Anna alluded to, the technology stocks really absolutely roaring. The Hang Seng Tech Index up about 10 percentage points. The idea being that maybe the worst of the regulatory crackdown is over. And of course, more supported growth in China, in theory, is good for the commodities complex because it means more demand. You saw that reflected a bit in iron ore futures overnight, up about 3% in Singapore. Finally, in FX, I wanted to point to the yen because, of course, this was the story yesterday, Kriti, of yen weakness and dollar strength to levels we hadn't seen since 2002, but a little bit of reversal of yesterday's move. It is a stronger yen by about 0.5% relative to the US dollar this morning. We are now at a 130 handle, Kriti.
Yeah, Kayleigh, it's really important that you bring up that stronger dollar. It almost is a story that's continuing, but I almost feel like today's trade in the United States is a reversal of what we saw yesterday. 2.5% gains at the close close yesterday. Naturally, from just a technical point of view, you're going to see some of those gains pull back. Of course, it's also a Friday, so a lot of investors taking cash off the table ahead of the weekend. It's ahead of the long weekend. I believe a holiday on Monday in the UK. You do see futures with a little bit of a lower bid. A lot of that, of course, sentiment is coming from that worsening tech picture that Anna just pointed out. The 10-year yield, though, seeing a little bit of a bump, 2 basis points higher. Let's see, though, if that continues, because do we start to see that story of higher yields, lower tech? Really, what is the sensitivity here? Right now, it seems like the sensitivity is to the dollar, where you do see that stronger dollar come down just a little bit, driving perhaps some of the gains, not just in the commodity market, but in the global currency market. Of course, Bitcoin really in line with that risk-off sentiment, Anna, down 1.5%.
Okay, and here in Europe then, Chrissy, we have what looks like a risk-on session underway here. A lot of competing headlines when it comes to technology, and the market trying to look through some of those and make sense of them. We've also had plenty of data out this morning from various parts of the European economy. We put that together with the whole Eurozone picture right now. The economy growing at 0.2% in the first quarter. That's matching estimates. The Euro area inflation rate rising to 7.5%, but again, matching estimates. More on the Euro and that reaction to that inline number in just a moment. But this is the picture then, pretty risk on for European stocks right now, up by more than 1% on the CAC 40 and the Xetra DAX. Technology is a really interesting beast here in Europe today, because it doesn't look like the US tech scene, of course. It doesn't look exactly like the Asia tech scene, of course, either. But technology is one of the better performing sectors here in Europe, despite the negativity around US tech. We've had that better messaging coming through from China around their technology sector. And there is a direct link there. We see Tencent go higher. That moves the Prosus share in Amsterdam, and that lifts the tech sector. But there are other things going on here as well. So technology up by more than 2%. The euro then not reacting all that much, actually, to that data we had just moments ago, and in fact coming through the morning, it was in line. Also, the euro had already been gaining. And to Kaylee's point about how we're seeing a reversal of yesterday's trends, yesterday we saw dollar strength. Today we see a bit more euro strength. But is that really just a reversal of the strong dollar story of yesterday? Just at the margin to some degree. No huge move, still a 105 handle, so still kind of weak. We'll talk more with Philip Lane a little bit later on from the ECB. That's coming up later on in programming. So that's a conversation to tune in for. On the earnings story, NatWest Group finishing off what's been a busy week of bank earnings here in Europe. The stock down by 6%, though, despite the fact they spoke very positively about mortgage markets, and actually the numbers showed what higher interest rates can deliver for the banking sector. Johnson Matthey, this is a pollution control business, and really flying this morning. We saw Standard Industries based in New York taking a stake in that business, and that lifts that share price. On to Russia. The focus today will be on the ruble. We've got a central bank meeting taking place later on. Will we see a cut in interest rates? That's widely anticipated then, Kaylee.
Yep, Anna, that, of course, is one of the events we will be looking for later on today. In terms of what else we'll be watching, of course, we get earnings results from big oil companies, including ExxonMobil and Chevron. How is this going to go down politically when these guys are likely to report big profits due to higher oil prices at a time where people around the world are struggling with inflation? Then, as Anna says, the Bank of Russia's rate decision is at 6:30 a.m. New York time. Plus, President Biden will be meeting with Mexico's president virtually, and we'll get some U.S. economic data, including personal income and consumer confidence. Creedy.
Yeah, Kaylee, let's get to one of the biggest stories overnight, and arguably this morning as well. Elon Musk selling about $4 billion worth of Tesla stock as he pursues that Twitter deal. Bloomberg's Laura Wright joins us now with the latest. Laura, walk us through it.
Well, I guess it's reassuring for the rest of us, Critty, that even the world's wealthiest person has to make sacrifices in order to buy what they want. News that Elon Musk selling 4.4 million Tesla shares to fund that acquisition of Twitter. That said, Tesla up in the pre-market some 3%, and Twitter up 0.3%, priced at $49 a share, but it's still below that magic share price number offer of $54.20. Now, Elon Musk, he tried to assuage the concerns of some market participants by tweeting that he doesn't have any more plans to sell Tesla stock at this stage. But for some, like Dan Ives over at Wedbush, the damage is already done. He sees Musk's acquisition as Twitter as an albatross around Tesla stock.
All right, well, Tesla stock at least getting a nice lift this morning. You cannot say the same for Amazon and Apple. Laura, walk us through those results overnight.
Yeah, brutal in the pre-market for Amazon, down 8.5%. And this was really a story of rising costs. Amazon ramping up their delivery, fulfillment centers, employees over the pandemic. But now there are signs of decelerating growth as consumers rationalize their online spending and are feeling the oncoming headwinds of inflation, so curtailing discretionary income. But there was a bright spot for Amazon. We discussed this yesterday. The cloud business, Amazon Web Services, beating the street's forecast with revenue growth up 37% year over year. Now looking at the world's most valuable company, that is Apple, a record non-holiday quarter and news of $90 billion of share buybacks. Not enough to offset the macro headwinds, and that is something that Apple's CEO Tim Cook discussed with Bloomberg Television's Emily Chang, and those macro headwinds are set to cost Apple between $4 to $8 billion in the upcoming quarter. And just a quick look at some of the product breakdowns for Apple. Demand for iPhones was above estimates, robust, strong sales for their services, but iPads, that was one laggard because they were unable to get all of the parts that they needed due to those supply chain congestions.
Yeah, absolutely. Thanks very much, Laura. Bloomberg's Laura Wright with the latest on tech and picking up on some of the headwinds facing some of the tech names. Some of those come from China. China's top leaders, though, promising to boost economic stimulus to spur growth. They vowed to contain the country's COVID outbreak, which is threatening official targets for growth for this year. Let us get to Bloomberg's Tom Mackenzie, who's with us. Some really strong statements and some strong market reaction to those statements, but we still have COVID lockdown policies or COVID zero policies.
And they reiterated that once again. If you listen back to President Xi Jinping about a week ago, he said, we're not backing down from COVID zero. If you wanted to just underscore that point, then listen to the Politburo as well. But what has juiced the markets, and especially given some optimism around what happens with the economy, is this statement before the end of the market close, which is unusual in itself. We can read into that the urgency that policymakers are feeling. The statement from 24 men, 1 woman of the Politburo, the most powerful officials within China, saying they will strive to meet the economic targets for China for this year, 5.5%. They will step up support for the real estate part of the economy, the real estate sector, property, and they will speed up and resolve the regulatory scrutiny on technology. All of that feeding into the optimism, because there's been this central contradiction for China, which you nodded to, of course, which is they continue to knuckle down on COVID zero. They continue to pursue that policy. We've seen that unfold in Shanghai, some lockdowns in Beijing and other major parts of China as well, whilst also wanting to meet those growth targets at the same time as scrutinizing property, scrutinizing technology. So maybe this is a sign that the shoe has dropped. What are we watching for next? There's been some reporting from Hong Kong media that you're going to get a meeting between senior Chinese officials and tech sector executives. Again, that led into the optimism we saw today, so we're watching for that. And we're watching to see how they flesh this out. Are they going to give more leeway to local governments? Are they going to increase infrastructure spending, as President Xi Jinping has suggested? Those are the things we're watching out for now to see how they flesh out this policy statement, important policy statement for the Politburo. We're looking for implementation.
Okay, certainly market moving in the meantime. Thanks very much to Bloomberg's Tom Mackenzie for that update on what's going on in China. Back here in Europe then, Germany's Vice-Chancellor says the country won't block an EU oil embargo against Russia. Robert Habeck says Europe's biggest economy could also handle a complete energy cut-off, but made clear he's sceptical about an oil embargo, arguing it would allow Russia to sell crude to other countries for a higher price. Let us get more detail then from Maria Tadeo, our Europe correspondent, who joins us now from Brussels. So what do we know then for sure, Maria, or what is being thought about in Brussels when it comes to whether we will or won't see some kind of block on oil from Russia into Europe?
Well, Anna, for starters, we have a change of tone, perhaps a change in tune from Germany, and that would clear the way for this embargo of Russian oil into the European Union to happen. Remember, this has been debated now for weeks. First, we had to wait for the French election, and then, of course, for Germany to make this move. Now they say we're not fully convinced it's going to work, but we're not going to block it either. Now, in terms of the timing, Anna, the reality is we hear everything. It could happen at the end of this week or maybe even at the end of the month. And the reality is the biggest question remains unanswered. Is this going to be a full embargo, a light embargo, a cap on the price, perhaps a tax on it? All of this has been floated, debated, but there's no clear answer. And then, of course, Anna, we have to stress that for Germany in particular, this is not an oil story that you can replace easily. For Germany, it really is a gas story. And we've seen this week that Russia, if they want to cut it, they will cut it. So, of course, the biggest issue and the elephant in the room for Germany continues to be gas. And on that, they don't have an answer.
Bloomberg's Maria Tadeo in Brussels. we always thank you for your time and for your insight. Moving from Brussels to D.C., President Biden has asked Congress to provide a further $33 billion in additional military economic aid and humanitarian aid to Ukraine. He spoke yesterday.
We need this bill to support Ukraine in this fight for freedom, and our NATO allies, our EU partners, they're going to pay their fair share of the cost as well, but we have to do this.
Let's get to Emily Wilkins, Bloomberg government reporter in D.C. Emily, what kind of congressional support does President Biden's aid package have?
Well, Creedy, this actual funding for Ukraine, this $33 billion, that has widespread support, very bipartisan, absolutely seen as must-pass legislation. But of course, here in Washington, if there's a must-pass bill, it means that lawmakers are going to try to attach other priorities to it. You heard President Biden yesterday ask for a funding for COVID. That's including the vaccinations, other medications. Remember, Congress initially agreed to $10 billion in additional COVID funding, but that was blocked because Republicans tried to add a measure that would continue a policy that makes it easier for migrants to be turned away at the southern border. That wasn't stated during COVID. White House now wants to end that policy, but Republicans and even some Democrats are saying that it needs to be kept in place. So that stalled COVID, and now COVID might potentially stall Ukraine aid if Democrats decide to attach it. Now, we don't know exactly what the legislation that Congress is going to be bringing to the floor looks like. We'll learn a little bit more about that next week, but a final action on this can't be done next week. It's going to have to be the week after because the House is out, so we'll just see the Senate in next week, and then the House come back to attempt whatever they decide to pass, whether it's just Ukraine aid, Ukraine or COVID, or even potentially something on immigration.
Yeah, and as the president said yesterday, I don't care how they do it as long as both things get done. Thank you so much to Emily Wilkins of Bloomberg Government down in Washington for us. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A lot moving lower on the back of earnings, including Robinhood. Remember, it saw a big benefit of all those retail investors with stimmy checks coming in to the financial markets during the pandemic, but that is starting to fade given a more challenging macro environment. And as a result, first quarter revenues sank 43%. Of course, that coming just days after the company said it's cutting 9% of its workforce. That stock down about 11% before the bell. Intel also is moving lower. Weak forecast for the top and bottom line, indicating not strong demand for its chips. It's down about 3%. But one more positive story out there is U.S. Steel. It beat expectations in the first quarter and said its second quarter is looking like it may be the best for that period ever for the company. That stock up a little more than 4% before the bell, Anna.
Still to come on the program then, Kaylee, we will focus back in on earnings, but from the pharmaceutical sector. AstraZeneca's CEO, Pascal Soriot, he will join us. Just how normal are the levels of cancer diagnosis and treatment that we're seeing? We'll get to that conversation, as well as, of course, talking about COVID. And later today, we will hear from the ECB chief economist, Philip Lane. That's at 7:15 a.m. New York time, talking about inflation versus growth. 12:15 p.m. if you're here in London. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
vaccine season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines over in New York. Matt Miller is off today. Now, Astrazeneca's profit and sales in the first quarter exceeded analyst estimates. That's as the UK pharmaceutical company overcomes disruption to its cancer drug business caused by the pandemic. Joining us now is the Astrazeneca CEO, Pascal Soriot. Pascal, very nice to speak to you. So you managed to beat expectations for some of the measures today. There is some concern around maybe some of the growth areas of the business. For example, a slight miss on Alexion, and some people asking questions about where you go with Imfinzi. What do you have to say to those who maybe are wondering if you can deliver on growth expectations?
Good morning, Anna, and thank you for having me. It's a real pleasure to talk to you today. We had a tremendous first quarter with a growth rate of 60%, and sales reached 11.4 billion for the quarter globally. So really a great result. This is true that a couple of products didn't grow as much as expected, and mostly in the cancer area, and it's due to the fact that COVID is still affecting cancer diagnosis and treatment in many countries around the world. Still, despite this headwinds, our cancer franchise grew by 25% in the first quarter, and we can see things are improving moving forward. So, you know, good hope on the horizon. But definitely COVID is still having an impact on some of our products.
Yeah, but let me just get a little more detail from you, Pascal, on that subject. So cancer diagnosis and treatment, we know, was not a focus during the pandemic, and there's a lot of catch-up on that front that's taking place. So are we back to pre-pandemic levels in that kind of treatment, diagnosis and treatment, or do we still wait for that?
No, not totally. We are. I mean, it varies by country, of course. Some countries are more advanced than others coming out of the COVID phase. And even within a given country, different regions will be at different stages. But broadly speaking, I have to say we are not back to pre-COVID level. There is still an impact on the speed at which patients are diagnosed and treated. And there's also, as you know, in many countries, a huge backlog of patients across, you know, many different type of diseases who are waiting to be properly diagnosed and treated, and that is, of course, impacting cancer treatment overall.
On the subject of COVID, Pascal, let's talk about your COVID vaccine. Obviously, there is now much more supply, yet demand for COVID vaccines is starting to fall. Other companies have seen buyers canceling orders. Is that something you have seen, and are you cutting back on manufacturing and production as a result?
Yes, Kelly, it's exactly the case. We see the same as other companies. We're no longer in a phase of scarcity of vaccine. We have oversupply globally of vaccine doses, and we are moving into a different phase of the management of the COVID pandemic, people getting booster doses. So our focus now is on a product called Evusheld, which is a combination of two long-acting antibodies that are used to protect people who are immunocompromised. Those are people who have blood cancer, solid tumors, people who have immune diseases. And some of those people have low or even zero response to 2, 3, 4 doses of vaccines. And then now they represent up to 40% of hospitalizations for COVID infections. So those people really need additional protection on top of the vaccination. And our product Evusheld is here for this, and we've been supplying it to many countries around the world in the last couple of months.
Okay, so that's on therapies. What's the plan for your vaccine and immune therapies business beyond COVID?
Yeah, we're working on a variety of other antibodies that could be used for other viral infections. In particular, we have an antibody that is in review with many regulators around the world for RSV infections in kids, in babies. RSV, actually, this virus kills babies around the world, and this product is a one-shot injection for some of those babies who need to be protected. We're also working on antibodies for other viral infections, And on top of it, we're also looking at additional vaccines we could develop for other infections, but we are at the very early stage of looking at our long-term strategy there.
Pascal, it's Creedy in New York. I want to stick with the COVID theme here and ask you about the lockdowns in China. How are they impacting your business?
Yeah, it's a great question, actually. China is suddenly very much affected at this point by this COVID infection. There's about 30% of China that is now affected either in lockdown or in suddenly what I might call semi-lockdown. So it's really impacting people and their ability to be diagnosed and treated. It's also starting to affect supply chains in Shanghai in particular, where our headquarters and our factories are located. Supply chains are really impacted by COVID. So I hope that the government can quickly get control of this COVID pandemic and return to normal, because it is going to affect people in China, but I'm afraid it will also affect global supply chains.
Let's stick with the China theme here. In the past, you've called President Xi Jinping a visionary. Do you still feel that way? How would you assess his leadership?
I think he is really taking China in a historical direction of opening the country to innovation and to embracing commercial agreements with the rest of the world. At least in our industry, we've seen China invest a lot in innovation. There's a huge amount of innovation that is happening in China at this point in time. The government has been accelerating the review and approval of innovative medicines. They've been investing money in making sure those innovative medicines are reimbursed and accessible by more and more people across the country. So clearly, we see China moving in the right direction, but of course, COVID has got in the way, and it's unfortunate that we cannot get back to a normal stage where we could go to China and commercial and have a normal collaboration with China, but moving in the right direction.
Pascal, we've spoken to you for a number of years as the CEO of Astrazeneca, and I want to ask you about succession planning as a result. You said a few months ago that you're building up a strong pipeline of managers, including several who could one day succeed you. I wonder if how far succession planning has gone at Astrazeneca.
Well, succession planning for any company is a critical role of management and the board. And I've been working on developing people who definitely could replace me at the appropriate amount of time. But I just want to say I'm not going anywhere at this time. There hasn't been a better time in the history of mankind to be in our industry. There's so much innovation that is happening around the world. We were talking about China, but we are investing in Cambridge in the US in a new site that will be minutes away from the Broad Institute, Harvard, the MIT. And so we are changing the treatment of so many diseases with this innovation. There's no better time, and it's so exciting to be in our industry. I'm not going to go anywhere anytime soon.
All right, and on that note, we will leave it even if you aren't going anywhere. Pascal Soriot, CEO of Astrazeneca, thank you so much for joining us. Now, keeping you up to date with news from around the world, here's the first word. Russian forces have pounded targets from one end of the Ukraine to another. That includes Kyiv, which was attacked while the head of the UN was visiting. It's the boldest attack on the capital since Russian troops retreated several weeks ago. Engine shortages are holding down the readiness rates of F-35 fighter jets. Congressional auditors say that since the start of 2020, an increasing number of the jets haven't been able to fly due to the lack of an operating engine. Fixing or replacing them is taking longer than expected. They're built by Raytheon's Pratt & Whitney unit. And Barclays has suspended market-making activities in its own debt securities. The British bank is trying to fix a paperwork blunder that saw it mistakenly issue $15 billion of U.S. securities. They say the mistake shows material weakness in relation to the internal control environment. Coming up, we'll have more on the market. Charlotte Ryan, co-head of investments at CCLA, will be joining us. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Elon Musk sold about $4 billion worth of Tesla stock after clinching the deal to buy Twitter. Analysts and investors had suspected that Musk might need to sell some stock to cover the $21 billion equity portion of the deal that he personally guaranteed. Shares of Apple are falling. The company predicts that supply constraints would cost up to $8 billion in revenue during the current quarter. Meanwhile, Amazon acknowledges that a hiring and warehouse building binge during the pandemic is catching up with the company. The e-commerce giant says it lost money in the first quarter and may lose money again in this one. And China's Communist Party leadership has ignited a market rally. The Politburo promised to boost economic stimulus to spur growth and to contain the country's worst COVID outbreak since 2020. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines in New York. Matt Miller is off today. And for a host of reasons, Kriti, it seems that the European equity market's looking through weakness in US tech. How do US markets look ahead of the start of the last day of trading of the week?
Yeah, and I think that's really the key to it, right? It is a Friday. There is going to be a long weekend in the UK. What's interesting here is simply this is a reversal largely of what you're seeing from yesterday's trade, which is the idea that the S&P 500 closed up 2.5% in anticipation of those big tech earnings. Now, of course, that forward guidance, Anna, that you were just referring to, not helping the future sentiment so much, down about 0.7%. It's also a risk-off kind of move in the bond market as well. People cashing out of treasuries, yields up by 4 basis points, and it's only 5:30 a.m. here on Wall Street. Of course, the dollar a little bit weaker today. Of course, we know the strength had driven the weakness in the euro, the yen yesterday as well, and the yuan overnight, I should add. A little bit of a reversal once again into that trade, and Bitcoin joining that risk-off party, down 1.6%, Kaylee.
All right, Kriti, well, of course, let's talk more about those tech results that you mentioned, because it was pretty brutal overnight for Amazon and a little bit for Apple as well. Amazon is now down about 9% in pre-market trading, of course, cutting its forecast for the quarter, feeling the bite of inflation, demand starting to get hit, and the company saying, yeah, we may have overinvested in warehouses and employees during the pandemic, so that stock taking it on the chin. Apple also down 2.5%. The issue isn't the first quarter. That was actually a record non-holiday period for the company. It's the fact that they say because of supply constraints related in part to COVID-19 lockdowns in China could mean about an $8 billion hit in revenue for the company. You also have Robinhood plunging about 11%. Its revenue was down about 43% as some of that stimulus-fueled retail trading boom starts to fade. More positive story out there, though, would be Tesla. Of course, we got news overnight that Elon Musk sold $4 billion worth of his stake in the company to fund that acquisition of Twitter, but he says that's it, no more sales planned. So a little bit of relief coming into that stock as a result, up about 3.5% before the bell, Anna.
Okay, no more selling there then, Kaylee. Let's check out what's going on here in Europe. We have buying of European equities, maybe reflecting that late in the day rally in the US that Kriti was talking about, and the optimism coming through from the China session, the Asia session really strong, as we heard about earlier on in the program. Not really dwelling too much on weakness in US tech, and that is something of interest here in the European session. The euro dollar then, 105.74, still a 105 handle, but turning the corner on a couple of days at least of dollar strength, if not more, and turning that into a little bit of a euro strength. We will be speaking to Philip Lane a little bit later on in programming this morning, and so that's something to watch out for later on in the day. NatWest Group down by nearly 5%. This, the banking group here in the UK, talking positively about the mortgage market in the UK, not too bad about the consumer, and also around net interest and the way that interest rate hikes here in the UK can really lift this kind of business, but the stock not performing all that well, down by nearly 5%. Johnson Matthey is a producer of products that limit pollution, and they have received, or at least there's some money going into them from Standard Industries taking a stake in that business, and that has pushed the share price a little bit higher. On the Russian assets front, the focus today will be, in a few hours' time, on a Russian rate decision. It's been widely flagged that we should see a cut in interest rates, bringing that interest rate down then, Kriti, to probably lower than the inflation rate.
Yeah, and I think it's that kind of central bank policy around the world that's creating a lot of volatility in the markets, specifically the bond markets. And that was really where we started off the year. Somehow that's trickled into the oil markets, which is once again kind of cycled back into the commentary you're hearing from the Federal Reserve and other central banks around the world. The result here is currency volatility just spiking going into really the end of April and really creating a lot of that volatility you're going to see in a lot of the stock market, as well as currencies from around the world. I really want to ask our next guest, Charlotte Ryland, co-head of investments at CCLA, what this all means. Charlotte, thank you so much for joining us. Break it down for us. What asset classes volatility should we be looking at the most? Is it the oil market? Is it the bond market? Or is it the FX market?
Oh, goodness. And we've seen very extraordinary volatility in all of them. Also, of course, within the equity market as well. We've seen some pretty huge gyrations in some very large tech companies over the last few weeks as well. So, I mean, the FX moves, I mean, clearly you've seen a great deal of strength in the dollar, particularly against things like the yen, which reflects the very divergent interest rate policies we've got, with the US, of course, being really quite hawkish, and other parts of the world, Japan, the most extreme of that in terms of still sticking with the very low interest rate policy. Europe, of course, being in a slightly more difficult position, given, you know, the economy looks somewhat more precarious there than it does within the US. So, you know, I think it remains an extremely uncertain environment for all asset classes, and I think you're going to continue to see that volatility in all the markets, therefore.
How long do you think, good morning to you, Charlotte, how long do you think that inflation will continue to scare, to spook assets? Are we anywhere near peak inflation here in Europe, for example?
Well, again, different question. But for us, we thought that, you know, some of the base effects will begin to come through as we move into the second half of this year. You know, the fact that you're competing against sort of somewhat higher levels, particularly in things like, you know, oil and commodities. I'm clear there's an uncertainty built into that with Ukraine and the situation with gas prices, and that is much more of an impact on Europe than it is, say, on the US. And then in terms of things like, you know, labour market inflation, you know, possibly beginning to see some improvements there with participation rates picking up in particularly in the US. But of course, again, the wild card being China. As long as China continues to lock down its economy, that is going to continue to cause problems in supply chains. And we've certainly seen that come through in a number of company results over this results season.
Yeah, and Charlotte, on the subject of inflation, we just had a red headline crossing the Bloomberg terminal. Sri Lanka's April CPI, 29.8% year on year. That's even greater than the estimate of 25%. And obviously, we've seen some political turmoil in Sri Lanka as a result of these higher prices. That follows Turkey with a 42 handle on its inflation estimate for the year yesterday. I saw interesting research out of JP Morgan in the last 24 hours or so about inflation, saying that the market's fears around that probably are misplaced, because if you look at earnings expectations, the fact that they're rolling over indicates that growth is going to slow. Therefore, central banks aren't going to be as aggressive, and maybe inflation has peaked. How are you thinking about that read from earnings, not just what we're seeing in quarterly reports, but the view going out?
Yeah, I think that's going to be the great debate as we move into the second half, is to what extent do either central banks push in terms of slowing growth, or equally do we start to get a margin squeeze on companies coming through in the second half, and what will happen to the consumer? Because you know, certainly the lower end consumer is going to feel much more impact from some of these cost increases than perhaps some of the other consumers. Emerging markets consumers will be particularly vulnerable to some of those moves too. So we would definitely expect the growth beginning to slow off into the second half. Whether it does enough to actually push us into recession, I think that certainly wouldn't be our base case at the moment, particularly in the US. But certainly the growth outlook is continuing to look more difficult as those cost pressures begin to bite both on industries and on the consumer.
All right, so in a slowing growth environment, Charlotte, where are you putting your money?
Well, I mean, the obvious place, if you say it's slowing growth, you're going to rush off and buy the defensive end of the market. So whether that be the staples or the telecoms, etc. I suppose the problem with that trade is a lot of those stocks have moved very far already, not necessarily looking hugely cheap. So I think possibly there has to be sort of balanced off a little, perhaps with some of the sort of looking at some of the things that have been really, really badly hit over this year. We've had a huge amount of value compression, some quite dramatic falls in a number of names. Now, there's potentially some sort of interesting things popping up there, whether that be some of the tech names that might balance off that portfolio. But yes, certainly we would be tending to more defensively positioned, probably higher cash than we might normally have, but it's certainly looking for some of those opportunities as well.
Charlotte, thanks so much for your time. Charlotte Ryland of CCLA, thank you very much for joining us. When we come back, we will be talking to investor Mark Stokel of Adams Funds, wrapping up a big week for tech earnings. We'll talk to him about some of the stocks in the tech sector that he owns. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that. Bloomberg Television. Top experts. Great questions.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Kriti Gupta in New York and Anna Edwards in London. Matt Miller is off today. Well, Kriti, Anna, NASDAQ 100 futures are now down more than 1 full percentage point, and in large part, you can blame that on Apple and Amazon. Apple predicts that supply constraints will cost up to $8 billion in revenue during the current quarter, casting a shadow over record-setting results it just reported. Apple CEO Tim Cook saying in an interview with Bloomberg, quote, "We did experience supply constraints, but they were significantly lower than what we experienced in the December quarter. They were all silicon shortage related, and it affected several of our products." Meanwhile, Amazon says it lost money in the first quarter, and it forecasts another loss is possible in the current period. Joining us now is a shareholder in both of these companies, Mark Stokel, CEO of Adams Funds. His top holdings not only include Apple and Amazon, but also Alphabet, Meta, and Microsoft. Mark is up a bit earlier for us this morning from Baltimore, Maryland. So Mark, thank you for setting the alarm clock extra early. How are you feeling about your Apple and Amazon positions this morning?
Well, first of all, I suspect we all heard a collective sigh of relief yesterday afternoon at 4:30 when Apple reported, because I think there were some people that were expecting that it wasn't going to be as good as it was. The Apple quarter was really good. You mentioned Tim Cook had talked about supply constraints. They likely navigated that better than any tech company that we have been able to see. They were revenue, gross margins, earnings, all really good, all geographies, all products except for iPad. So I think as the quarter goes, I think it was very good.
But how much of a liability do you see China being for Apple in particular, Mark?
Well, interestingly, it's interesting because the first thing we were looking for is revenue and margin and earnings. And then the second thing was really, what about China? And it appears, even with the slowdown and the shutdown in China, that Apple navigated that incredibly well, which is a surprise. I did not expect it to be as good as it was. But going forward, if it stays this way for a prolonged period of time, it's going to have an effect. But again, for a big company, Apple's been able to navigate most of these things incredibly well.
Mark, good to speak to you. What about Amazon? Do you think that they have navigated things incredibly well, or do you think they have overinvested and overexpanded during the pandemic?
It's a really good question. And I think a couple things about Amazon. Number one, I think we have to remember that Amazon is big enough and diversified enough to really feel the full effects of the macro challenges that are around, and they did. There's no question. One of the, interestingly about Amazon, one of the things that we have always liked, and one of the things that always drives us crazy is that Amazon spends a lot of money. They invest more for the future, further out than probably any company that we've invested in, which is good and can be very frustrating at times. It does appear that they probably did overinvest. Certainly with all of the distribution centers that they brought online, they doubled in almost 2 years, and bringing in a lot of people. The good news, as far as we're concerned with those types of expenses, they will grow into that. I'm really not worried about that part of Amazon.
Okay, if you think then that they grow into their current size, Mark, is now a buying opportunity for this kind of business, as it's been sold off on other people's concerns about overinvestment?
If I didn't own any Amazon, I would probably buy some on the dip here. We do own Amazon, so we're not going to this morning. I think the biggest question to us is what is the durable operating margin for Amazon? And I think it's hard to know that. The law of large numbers, they've been able to navigate that very well. But I do think that when it comes to operating margin, they did mention that they're going to be spending a little less in the next quarter or two, which should help. But it's and it's also not cheap. That's the other thing. What do you pay for a company where you're not quite sure what those operating margins are going to be? You might pay a little bit less. It's off a little bit today, or it would be off a little bit today, given the pre-market. But if I didn't own it as a long-term investor, I would certainly buy some on the dip here.
Mark, talk to us a little bit about simply the effects of these companies or role of these companies as a beacon or as a proxy for the health of the broader economy, the health of the consumer. Do these companies still play that role?
They do, and I think you could argue that Apple has a tremendous amount of brand leverage because of their consumer business. So although they've got a great franchise in phones, they got great franchises in service, which should continue to do well for them. They are going to continue, I believe, to be affected by what happens to the consumer. Now, the good news is, you heard from Amazon. Amazon did not see a slowing consumer, which is a little surprising, but I think good news. But I do think, depending on what happens to the consumer over the next year or so, both of these companies are going to have to navigate that, and it could be a headwind for both of them.
Mark, you said you were a long-time holder or a long-term holder of Apple and Amazon, among these other tech companies. You would buy on the dip if you weren't a long-term holder. What would it take for you to sell some of these companies?
I think we will be digging into the operating margin issues at Amazon, and I think that's To me, that's the biggest issue there. Again, great company, does a lot of good things. But, you know, one of the questions, frankly, is, has it gotten so big? I mean, it's 40% of e-commerce. I mean, is it going to get to 50? You know, what kind of growth can we see here? Again, the law of large numbers, I mentioned that a little earlier, can come into play here. So we need to really dig into understanding the operating margin issue at Amazon to decide whether we want to continue to be holders there. On Apple, you know, it's not cheap. I think it is reasonably valued, but it's certainly not cheap. But what gives us a lot of comfort with with Apple is the services. The services gross margin continues to go up. It's really good. Services continue to grow. And so that gives us a lot of comfort that there are a lot of good levers that Apple can pull going forward. But for us, we're going to spend a lot more time on the Amazon.
Okay, thanks very much, Mark. Thanks for joining us. Mark Sokol, a Chief Executive Officer at Adams Funds, talking about the tech sector. We'll stick with the tech theme later today. Intel CEO Pat Gelsinger joins programming. That's at 11:30 a.m. New York time, 4:30 p.m. in London. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lines in New York and Anna Edwards in London. Matt Miller is off today. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now. Tom, your single best chart today.
Kriti, the sell side's checking in on Amazon and Apple. Let's go to Amazon, which is a more complex and maybe a more grievous story. Right to the chart, what you do is figure out the new price target and then read the material. Ron Josie at Citigroup has a more optimistic view with a ginormous lift lift expected in Amazon, up some 50%. He really maintains the optimism. Joe Feldman at Telsey looks for a return to normalization. On the left side, the pandemic, the huge lift up in Amazon, the painful churning over the last year and a half, 2 years. And Feldman pulls in his price target today, bringing it down. And this is based off EBITDA. What's important is the growth of Amazon. EBITDA is an act of God, moving from 3 years out, 4 years out, from 40 billion to a true double out to 91 billion. Many other companies would kill for Amazon's problems.
Yeah, what scale? Let me ask you from a macro perspective, what else is coming up on the program, Tom? Because I have mentioned at least twice already that you have the ECB chief economist Philip Lane on the program, so I know that he's going to be joining.
Right, and you know, Anna, that Professor Lane of Ireland is one of the great global academics, and at this time, this tumult, the amazing choices out there to speak to Professor Lane will be wonderful. I'd also point out that John Farrow will speak to the White House. That's scheduled later this morning as they try to get some domestic initiatives going.
All right, really looking forward to both of those conversations. Tom Keene, co-anchor of Bloomberg Surveillance, thank you very much. And of course, on Surveillance later, they'll be taking you through the economic data at 8:30 a.m. Eastern time. It is the data that I'm watching today, Creedy and Anna. Of course, at 8:30, you're getting a couple of metrics. You have the Employment Cost Index, which is how the Fed prefers to gauge labor costs in this economy. You're also going to get personal income and spending data. It's going to be a story of goods versus services because obviously inflation may be hitting goods in the discretionary sector in particular, plus you have that rotation of demand towards services, but it's also a question of how far personal income is behind relative to inflation. And then at 10 a.m. Eastern time, we'll get UMich consumer sentiment, really important read on how the consumer is feeling, especially with those 1 and 5 to 10 year inflation expectations. I'll be taking you through it on Bloomberg Television with Guy Johnson and Creedy. I believe you'll have that covered on Bloomberg Radio.
Yeah, we absolutely will. Top of the 10 for sure. Another thing we're definitely going to be covering on Bloomberg Radio, then later at 1 p.m. on Bloomberg TV is going to be those energy earnings. Exxon, Chevron, the big oil giants are going to be posting potentially, expected at least, their biggest profits in at least a decade. We're really going to look at whether they're going to be investing some of those profits in their buybacks and capex. How much of that production ramp up is really in the cards, Anna, for some of these big oil majors?
Absolutely. We are going to be watching that, going to be watching those oil majors, and we'll build up a bigger picture here in Europe of how the oil majors are performing next week as well. We'll pick up on that earnings story. We're also watching here in this part of the world, watching a Russia rate decision. And of course, our thoughts on Russia often and usually turn to the devastation in Ukraine and the war that Russia is conducting there. But from a financial perspective, we'll focus on what's going on the currency perhaps a little bit today, although as we heard from Blue Bay a little while ago, this is, in their words, a broken market. But we will focus in on Russian assets a little today as we get a rate decision from the central bank. They're expected to cut from 17% to 15%. That would be lower. That would be taking the rate down to lower than inflation. Interestingly, they will also give a new outlook for the economy, Kaylee, and this could be interesting because we'll get a sense of the damage that the central bank acknowledges will be done or doesn't acknowledge will be done to the Russian economy as a result of the sanctions. And that sanctions story still evolving, as we heard from Maria, when it comes to Russian oil and potentially even Russian gas in the future.
Yeah, and it'll be interesting to contrast what the central bank thinks the economy is going to do with the remarks we've gotten from President Putin about the economic situation in Russia, saying that those sanctions, what he calls an economic blitzkrieg, failed to work, pointing to the ruble as evidence of that, the fact that it is stronger, in fact, than it was when Russia invaded Ukraine. But again, Anna, how much can we really trust that? That is the question.
Yeah, absolutely. Lots of capital controls, lots of policies around big business in Russia that enable the ruble to trade in that way. And that is it for the early edition. Surveillance is ahead. Lots more to talk about when it comes to the European growth story with Philip Lane of the ECB. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What we're seeing right now in the macro, we haven't seen in 30 or 40 years.
If you think about the broader macro environment, indeed, we have more challenges now.
If inflation remains stickier than we anticipate, it's possible the Fed has to be even more aggressive.
Our central bank is much tighter and much more willing to hike rates than anywhere else in the world.
It could get worse if the Fed moves as fast as it's telegraphing.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures negative 0.7 on the S&P. TK, it's all about big tech this morning.
It's about big tech picking up the debris off the shocks that we saw from Apple and Amazon, and really the stocks doing better, I think, than the way they were looking at 4:30, 5 p.m. Last night. What it is to me, John, is with that recalibration of bank earnings and what we see with the tech earnings, recalibrating into May to get us into the early parts of the summer. And the number one word this morning, uncertainty.
It's the forward outlook and the uncertainty around it, that's for sure, Tom. And the fact of the matter is, those two names, Amazon and Apple, just breathe life into everything everybody is worried about right now. Post-pandemic payback, supply chain issues, higher costs, and the threat of weaker demand in the future. Amazon this morning, Tom, in early trading is still down by almost 9%.
Yeah, Amazon taking the brunt of it, and it's interesting to see what sell side says. Ron Josie over at Citigroup really maintains optimism with a price target up 54%. But Joe Feldman with a nuanced note, and John, he brings in his EBITDA call even though he's looking for a lift in the stock. And what he's saying is simply this is a recalibration short term with a maintain all of that optimism long term.
That seems to be the consensus on Wall Street this morning. Bramo on the south side, RBC, inflation, underutilized ready capacity, and tough comps are something of a perfect storm, but we are now better baked into the Wall Street model. The reset, they believe that from here, the news is positive.
And a lot of people actually would agree, simply because you do have the idea of the impulse from China with some of the stimulus there, as well as the year-over-year comps for inflation, as you were saying, coming down. That said, there are some structural issues here, in particular with Amazon, how much they built up their warehouses, how much they hired people. Can they support that type of footprint in a post-pandemic economy at the same time as all the other issues beset growth?
I have to say, the numbers from Apple were killer.
Yeah.
The revenue numbers were great, throw in a $90 billion buyback, an increase to the share repurchase program. And then came the outlook.
Yes.
And that's where the problem is.
Well, $4 to $8 billion charge due to some of the supply disruptions and supply shortages stemming from China. They said that those sort of slowdowns and shortages would not show up in their current numbers. Going forward, this is going to be a problem. So how much does what China did overnight really start to offset that, given the fact that they're still sticking to their zero COVID policies?
Can we talk about that? What did China actually do?
Absolutely
overnight?
Nothing. They spoke.
There we go.
I mean, let's be honest. They spoke. They spoke
for a second
words.
time. I've heard this twice now in a week.
Basically, they're saying we will come out, we will support investment, we will support our economy. Oh, but by the way, we're still going to do lockdowns in any cases of COVID.
We'll keep you up to speed. At least we'll try. Let's see if they actually do something. Futures negative 0.6% on the S&P. On the Nasdaq 100 this morning. Good morning. We're down 0.9%. Yields bleed a little bit higher, up 5 basis points to 287.14, going into the Fed next week. And crude up as well, Lisa, 106.68, up by 1.25%.
And crude, an increasingly political story. It has been all year. Today we get a slew of big oil reports. First quarter earnings from Chevron, Exxon, and Phillips 66, all before the bell within the next couple of hours. This comes, of course, as gasoline prices have come down from some of the recent highs, but not that much. And this is important, right? They're still hovering near highs, north of $4. At what point does this become an increasing political talking point? That these are the big oil companies that are booking all the profits. Expect to hear lots of that throughout the evening and, frankly, into the weekend. 7:15 a.m., we are so lucky that we get to speak with European Central Bank Chief Economist Philip Lane. He'll be joining us here as we deal with some inflation data and economic data, GDP data out of Europe that just came out about an hour ago, showing inflation at the fastest rate on record at 7.5% in the Euro region, and growth basically stalling out, GDP growth quarter over quarter of 0.2%. How do they take a look at this and say, okay, we can support growth while also supporting a euro that has been absolutely pummeled in the face of weakening more broadly? What is the balance here that they are looking for? And today we get U.S. data, including personal income and spending, employment cost index, all that coming out at 8:30 a.m. And then, of course, the University of Michigan survey at 10 a.m. We are all watching the employment cost index. We know that Fed Chair Jay Powell has been keyed into this as a sign forward-looking of how much inflation has to run, John.
Bremo, thank you. Very much looking forward to that Philip Lane interview, Tom, a little bit later this morning out of the ECB.
He's an important voice. The only equivalency in recent Fed history would be John Williams in New York and Richard Clare, the former vice chairman. He is a research heavyweight. There's no question about that.
CPI at 7.5% in the Eurozone. TK, worth having a look at core, though. Core CPI in Europe still has a 3 handle. That's very, very different to what we're seeing stateside.
You know how I feel on this. I have real trouble with the parsing of inflation data. I'm sorry. I go to what does it mean for the households? The answer is it's a big number right now. You can do all the core analysis. Everybody's getting crushed by a core analysis right now.
Everybody's getting crushed in this market if you're long Amazon. We're down 8.7% on Amazon and Apple. We're down about 2.5%. Are you accusing me of doing something, Tom?
Yeah, you're talking Amazon down.
Is that right?
Yeah.
Jeff Yu joins us now, Senior EMEA Market Strategist at BNY Mellon. Jeff, let's start with the earnings. Can you reconcile the earnings in America with the wall of worry over the future?
Well, you can talk about wall of worry. I'm just going through our underlying custody flow index. We track 34 markets, only 7 net bought over the past week. Worst performer, US. Right. So clearly the market is very worried right now. They are selling equities. I'm seeing a sea of red on this, and all of the issues, from the companies that you talked about at the top of the hour, they're going to weigh not just on the US and globally as well. So it could be a forerunner of what's to come over the next 3 to 6 months.
Jeff, I got to get to autumn. Are you looking out over the uncertainty horizon, or are you totally focused on all the gloom Lisa's riveted to? Or do you just look out beyond that?
Well, I'm trying to look at beyond that, and the thing that you just talked about as well, China's going to do something. Well, do what? It's negative right now. Beijing's trying not to go into lockdown. They've just announced people can go back to work and school with a 48-hour clean test. But here's the thing. Let's say you want to be positive if there's going to be China stimulus. Be very careful what you wish for, because if it's going to be a 2009-style credit stimulus and they go build, then the supply chain issues, especially commodities, and the inflationary impact on that, you ain't seen nothing yet.
Well,
so be very careful what you wish for.
You ain't seen nothing yet, Jeff. How much could we see oil prices absolutely surge in the face of that stimulus, in addition to the likely ban that Germany seems to be backing on oil coming from Russia?
Well, pick a number, right? So it's certainly 20, 30, 40 bucks higher than where it is now. I'm looking more at iron ore. It's less about energy. It's more about the raw commodity, hard commodity, industrial commodity inputs, iron ore, copper, those prices. The Australian government has said probably iron ore should be a fair value, medium to longer term, 50, 60, that kind of a range, and disputed. And even the Chinese agreed with this, why it's been above 100 for a while. But again, if we go back, to a 2009 style credit stimulus, China's been saying last 5 years, they're not going to do this. Well, now if they do want to do that, then all bets are off. Aussie is going to be stronger, iron ore going to be stronger, coal's going to go up, and of course, oil's going to be impacted as well. Is that what the world needs right now? Yes, we want to see Chinese demand pick up, but that kind of demand growth, I don't think is what we need.
Is that more harmful than hurtful to the global growth outlook?
It certainly hurts the stagflation side of it. And here's the thing, be careful what you wish for as well on the demand side. So the commodity side, we feel, okay, if house prices go up again in China, if there's a wealth effect or anything like that, then maybe it can help. But Chinese can't go out and spend globally right now. So if you go to the European capitals, you go to the US, Fifth Avenue, lack of Chinese tourists right now, that's a $200 billion annual services deficit that is not going to the world economy right now. And still, even if, let's say, they do want to pursue this under a zero COVID policy, actual activity is going to be difficult as well. So like the same pressures that the companies are talking about, the central banks are talking about, they are still going to be there. And again, on the price side, they could be exacerbated.
Dan Ives of Wedbush just published on Apple, he said the following: China issues and supply chain should be peak worry in the June quarter and then subside into the key September-December quarters when we get a new iPhone later this year. He said the China issues were temporary and not a reason to panic and sell the stock on a non-demand issue. Jeff, just finally, do you think this is the quarter of so-called peak worry?
No, I don't think it is the quarter of peak worry because the drivers of the worries, from the war, from policy differentials, from China's zero COVID policy, those things could extend well beyond the quarter as well. Now, if there will be clear adjustment on several of those things, for example, if the Fed sets out a clear policy path for its entire cycle over the next quarter, that's certainly possible. We can get that from the ECB. And if there are going to be adjustments in how China manages COVID up ahead with economic growth at the forefront, then we could see that. But based on current rhetoric from policymakers and lawmakers, we're just not getting enough sign of it yet. So right now, I think markets are right to stay on the defensive, and we're seeing that in the flow data.
Jeff, awesome to catch up, buddy. As always, Jeff Yu of BNY Mellon. The call's there from Jeff Yu on the market. Dan Ives, of course, on the other side of this for Apple. Outperform rating. Tom, $200 price target.
Well, that's where he is. And I'm again going to go to the FA screen and just look at the profitability of these juggernauts. And we continue, John, even with expert knowledge, to not understand the growth that we see here. The Apple EBITDA, this is down the income statement and throw some balance sheet adjustment into it. The earnings before interest, taxes, and depreciation, amortization. And the growthiness, John, is staggering from 76 large to an estimated 133 large this year, pre-pandemic out to this year. Those are numbers that the mind can't grasp.
Those numbers are huge, massive.
They are huge. However, if you get any kind of decline, what is the valuation, especially at a time when you're reassessing what the cost of money is? And this is really the concern. And honestly, what I've been struck by, whether we're talking to the GM CEO or whether we're hearing from Apple, this idea of peak worry about China. How do we know it's going to subside? How do we know that those supply chain disruptions are going to get resolved? And we've been talking about this for years now, John, about the imminent resolution to some of these kinks in the chain.
The back half of the year.
Yeah.
For the last 2 or 3 years. 3 years now.
Yes.
I'm losing count, Lisa.
I know, me too.
Since the pandemic, Apple up 40% annualized.
It's not bad, is it, Tom?
It's just...
Go to cash.
Don't get me going. I mean,
That's what I'm here for, Tom.
The numbers are generational. They are a statement of American excellence and technology. Tim Cook looked at the Apple people and they were worried about the product, John.
You do not sound like a man in cash.
Tim Cook said, be the ball.
The Dow is down 1/3%.
Sounds like a man who's very long Apple stock.
No, it sounds like a man who watched Caddyshack last night.
Oh, dear
Still
be the
haven't
ball.
done that. Still haven't done that. We're down 0.7 on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. China's Communist Party leadership has ignited a market rally. The Politburo promised to boost economic stimulus to spur growth and to contain the country's worst COVID outbreak since 2020. A statement said that authorities should keep the economy running with a reasonable range. It also promised to guarantee supply chains in key sectors. Inflation in the euro area has climbed to an all-time high. Consumer prices rose 7.5% in April from a year ago. That was in line with estimates. The new numbers will raise pressure on the European Central Bank to end the crisis-era stimulus and raise interest rates. Russian forces have pounded targets from one end of Ukraine to the other. That included Kyiv, which was attacked while the head of the United Nations was visiting. It's the boldest attack on the capital since Russian troops retreated several weeks ago. Elon Musk sold about $4 billion worth of Tesla stock after clinching the deal to buy Twitter. Analysts told investors had suspected that Musk might need to sell some stock to cover the $21 billion equity portion of the deal that he personally guaranteed. Meanwhile, in Musk's pitch to bankers before the Twitter deal was done, he mentioned job cuts and ways to boost cash flow. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
Let me be clear. We will not let Russia intimidate or blackmail their way out of these sanctions. We will not allow them to use their oil and gas to avoid consequences for their aggression.
The President of the United States there from New York City this morning. Good morning. Equity futures down on the S&P by 0.7%, on the Nasdaq 100 down by almost 1 full percentage point. Amazon and Apple not exactly helping out this morning. Yields up by 5 basis points to 287.72 going into the Fed next week. We will catch up with the chief economist of the ECB in about an hour from now, Philip Lane, following CPI in the Eurozone at 7.5%. Euro dollar back with a 105 handle at 105.63, positive 0.6%. That right there is a rarity. It's a stronger euro. Some earnings out this morning from Chevron. EPS coming in a little bit lighter than expected at 336. The estimate 344. But net income, Tom, profit at Chevron, the biggest profit since 2012.
Yeah, I'm going to give a major shout out to Chevron. They don't hide it. I'll give them great credit on this. There's a huge pressure for them to hide the profits, and Chevron right up top of the release comes right out and says it. Compare and contrast 1 year out with their obligatory comments on the tragedy of Ukraine. I love the per barrel idea here, John. They have this in a very clear paragraph. It was 40-something a barrel. And this time around it was a little bit higher as well. And you see it in the income, which was a huge move, massive operating leverage out to a $6.x billion profit.
You mentioned a compare and contrast. If you compare and contrast now versus, say, 10 years ago, the team here at Bloomberg, Tom, just breaking down the numbers, we're investing only as much as half, not even in some places, in new projects compared to 10 years ago. Right. And if you look at the output of Chevron, and the team here breaks it down, they expect to keep overall output flat to down 3% this year. That is what is getting the politicians in Washington pretty annoyed.
And John, you know I do reading at the Nerd Prom table, and tomorrow night in Washington at the White House Correspondents' Dinner, I'll be reading through J.P. Morgan's 100-page dissertation on oil, and that's the heart of the matter, is underinvestment.
You're just the life of the party, aren't you? Taking Southside notes to a dinner.
Absolutely. Yeah, you know, I'm going to do sell-side notes there. Emily Wilkins will be working the room. She joins us now in Washington. Maria Tadeo. Maria, you really should fly in for Nerd Prime. Yeah, it'd be great. Where's something from Mazzoni? They join us here this morning. Maria, I've got to give deference to Emily Wilkins with the releases we see on the oil front in America. Emily Wilkins, just as simple as I can, how many minutes is it till the left stands up and says we need a windfall profits tax?
I mean, at this point, what they're really looking at, what they're really focused on right now is the FTC and really bolstering their ability to look at some of these major oil and gas companies and look into whether there's some sort of price manipulation going on here. You heard Speaker Nancy Pelosi, Senate Majority Leader Chuck Schumer, very clear yesterday that this is the path that they've decided to go on in terms of really holding the oil companies accountable. That's their message for the American people. That's why gas taxes and gas prices are so high.
I'm going to make an impossible segue here to really what I'm witnessing this morning. Maria Tadeo, am I right that this war is so grim right now, we really don't see it in the zeitgeist of the Western media, and that the fighting is so difficult that we're almost removed from it because of its violence?
Yeah, and we don't, and I would agree with that. And every time I speak to Ukrainian officials, they say that. And in fact, they now believe, given the fact that they have weapons coming into the country, that by June and late May, the nature of the war is going to change. Right now, Ukraine is on the defensive, but they believe if they get more weapons, they can now go on the attack, perhaps reclaim some of the areas the Russians have taken away. And they believe also that potentially this is a war that's going to continue until the end of the year. They see fighting in New Year's. Now, for the Russians, of course, and this is the different perspective when you speak to Russians, is that they have 2 weeks left to make some gains. And the pressure is on the Russian troops, the Russian generals, to get Vladimir Putin something he can present on that National Day parade on May 9th. By the way, Tom, when you look at Russian TV, they now speak very openly about this is not just a war in Ukraine, this is a war in NATO infrastructure, and yes, we're moving closer to World War III. This is something that you hear repeatedly every night on Russian TV.
What about in the other television stations across Europe? Maria, what's your sense of how much people are getting increasingly worried about some rogue move by Vladimir Putin, perhaps, if he doesn't make those gains in the next 2 weeks?
Yes, and everyone is extremely concerned about this, especially, of course, there's 10 days left, and we have seen that the fighting has really gotten very aggressive in the east. This is why they're now prepping another package of sanctions, which could potentially include oil. But then also, I would say, when you see the capital of Ukraine yesterday, Kyiv, with bombs, the UN Secretary General is there. It does show that Russia is still aggressive. When they say they want to make a threat, they act on it. And right now, by the way, the more pressure there is on Vladimir Putin to deliver something, well, the more aggressive and unpredictable he gets. So there is a lot of concern in Europe. There's also a lot of concern, and perhaps we're not paying enough attention to this, about the situation in Moldova. Real concerns about this escalating and spilling over from Ukraine into nearby countries. This is still an issue, and we're seeing it play out in Moldova at this time.
Meanwhile, we are seeing a $33 billion proposal from President Biden to possibly support Ukraine, add some add some military equipment. Emily, how much support is there to actually pass this bill?
Well, there's a lot of support, Lisa, in Congress from both Democrats and Republicans. The problem, of course, is that because there is so much support, Democrats are trying to add additional measures to the bill. You heard President Biden yesterday call for additional COVID aid to be added to that Ukraine aid. If you'll remember, Congress was about to give $10 billion to vaccines and future medications, but then that got held up because of an immigration issue that Republicans tried to attach to the bill. That's that Title 42 that keeps popping up and basically refers to a pandemic-era measure to restrict migrants who are crossing the southern border. That's supposed to end next month. Republicans want to keep it in place. That could very much get mixed into all of this, meaning that this Ukrainian aid that does have so much bipartisan support could be delayed or stalled if it gets mixed in with these other issues. At this point, we know what Biden's request to Congress is. We don't quite know what the legislation that Congress will actually take up will look like at this point. It's something we're going to be looking for next week. And remember, next week, the Senate's going to be here. They're going to be moving on this, but the House won't be in D.C., which means the soonest we're going to actually see some legislation get to Biden's desk on this will be about mid-May.
Emily Wilkins, thank you. Down in Washington, Maria Tadeo over in Brussels on the latest situation over in Ukraine. Next week is going to all be about monetary policy. The Federal Reserve, May 4th, and TK, we are looking for a 50 basis point rate hike from the FOMC.
And I say the economic data, clearly the negative statistic yesterday on GDP, whatever you think about it, is going to be front and center. But John, we still have to get there. There's a getting there right now. To be honest, John, I haven't looked at ECO go out to May 4, but you know what? They're going to have some more information, including PCE deflator today.
I'm looking at Exxon right now, EPS 128. The earnings include a $3.4 billion charge associated with Russia. We're going to dig into those numbers for you in just a moment. Futures down by 0.75% from New York City on TV and radio. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Big oil in America is making more money than God, and they're not shy about it. Exxon just delivering a $30 billion boost to their buyback, even with the politicians making a lot of noise. We'll catch up with the White House a little bit later this morning. Good morning to you. We're down about 0.8% on the S&P. We're down a little more than 1% on the Nasdaq 100. Two names on the S&P make up more than 10% of the index. Let's talk about those two names reporting after the close last night. These two names and those earnings and that outlook breathes life into everything everybody is worried about right now. Supply chain issues, post-pandemic payback, higher costs, put it all together, and fears about softer demand in the future. The Apple numbers weren't bad, but just the outlook for the current quarter enough to drag us down about 2.7%. I'd even say the Apple numbers for the last quarter were better than good. Amazon, though, down by 8.6%. And that captures all of your concerns right now about this economy. That's the US economy. We need to talk about Europe too, and that's going to be the focus later in this program. In the next hour, we'll catch up with Philip Lane of the ECB, with euro dollar at 1.573, stronger today by 0.7% against the dollar, and yields a bit higher again on a German 2-year. As this market starts to think about rate hikes from the ECB, TK with CPI at 7.5% this morning.
John, this is important, and as we speak to Philip Lane here in a bit, how does he discreetly treat German inflation versus any other country's inflation? That's my first question to him.
I would go one step further as well. How does he treat what is happening in this FX market? They will tell us it's not a target of ECB policy, but we know it matters for the medium-term outlook for price stability.
Are you paid in euros or sterling?
I am paid in US dollars, Tom, because I've lived here for 7 years now. And you keep forgetting that.
We need Dr. Phil today. I swear to God, this is going to be an issue.
How long have I been here for? Come on, TK.
Oh, my God.
Funded in US dollars. Do have expenses in sterling, though. Is that helpful?
Okay, fine. Are you done, or do you want to continue?
I am very much done.
That was very good data. John, thank you so much. This is a joy. On the passing at 91 years old of the great Ned Johnson, we speak of the visceral nature that was Fidelity. Abigail Johnson has done the #1 class act of following on from a giant in the industry, and it all started with a visceral treatment of securities analysis and technical analysis. Urian Timmer holds the high ground on the acclaimed chart room, the physical chart room with little itty-bitty pins and little big sheets of paper up in Boston, and he joins us this morning. Is Ned Johnson's chart room still there?
It is still there. Absolutely. And, 27 years ago when I was hired, my last interview of the process was with him, because nobody would get into the chart room without going past him first.
Yeah.
And we spent so many countless hours just poring over the little lines on the chart.
The trans-logarithmic chart. Did Peter Lynch ever go in the chart room?
Yeah. Peter Lynch,
really?
he liked his charts too. He didn't necessarily go into the chart room a lot, but everyone looks and should look at charts, even if you're a hardcore fundamentalist. The charts will tell the narrative often, as well as the fundamentals.
Speaking for Ed Hyman, all of us at Surveillance agree on that. What's the most important chart right now, given this historic uncertainty?
Well, certainly a long-term chart of the dollar index is important, especially the broader dollar index. It's back at the levels that it was in 2014 and even long before then. And really all the components that make up financial conditions, right? Whether it's equity PEs or rates, of course. Real rates, probably one of the most important charts right now, because I think that's what the Fed is trying to drive in terms of trying to slay this this inflation dragon. So we're in a pretty interesting part of the market cycle, and where it ends and what needs to break, if anything, how it ends is something we're all trying to come to terms with.
So, Joran, what are the charts telling you, especially now that we have the significant majority of a lot of the major big tech and other companies reporting earnings?
Well, this is a crucial component of the overall math of the stock market, right? So we know that we're in a PE derating cycle, right? When the Fed raises rates, it's trying to slow the economy by raising the cost of capital for everyone, whether it's home buyers or corporates. And the stock market is not immune to that, because when you value stocks, you look at discounted cash flows. So you calculate the present value of future cash flows using a cost of capital. And so the good news is that earnings generally are being reported, pretty well. I think about 80% of companies so far are beating estimates, and we've had about 200 companies out of the 500 report so far. And just using the weekly Bloomberg numbers that I look at, the estimate for 2022 is rising from 10 to about 11% so far, and that's an important offset, because that goes into the numerator of the DCF, because the denominator, the cost of capital, is going up as well as rates rise everywhere. So it's a tug of war with price at the intersection of a falling PE and growing earnings. So that's the balance we're in.
Joran, that's the math. In English, are we looking at a better or a worse outlook in the next 6 to 12 months than we thought before this earnings season?
Earnings estimates are rising, and not just for energy. I mean, energy is kind of the obvious place to look for that. But when you look at the 11 sectors, by and large, the earnings estimates are rising across the board. And so far, maybe surprisingly, there has not been a lot of erosion to the profit margin that you might expect coming from the inflation number. So companies seem to be passing along those increases in costs.
Joran, I'm looking at, since the financial crisis, our incredible addiction to double-digit return. Don't we owe ourselves a single-digit year right now? Do we almost need to pause in 2022, even into 2023, just to take a breath within a system?
Yes, and the 1994 cycle, I'm sure you remember it as well as I do, during the Greenspan days. There was no transparency, so Greenspan just did what he did. But that was a cycle where, after a decent run, the market had to sit around and do nothing for a year, and then, of course, it went up after that.
Do you go to cash when you do nothing? I mean, I think of, the giants of Fidelity, George Vanderhyde and the others. They didn't go to cash like 9 or 10% cash, did they?
No. I mean, if you're running an equity fund, you're running an equity fund, not not an asset allocation fund. So generally speaking, equity funds are invested in equities, but there could be rotation, right? So if you're in a slowing earnings growth environment and a falling valuation environment, defensive names like utilities and staples, become part of the mix. And when inflation is running hot, energy and maybe financials are in the mix. So it depends on where we are in the cycle, but certainly, generally speaking, when we talk to our broader investors, timing the market is a very, very tough thing to do. You have to get out at the high and then get in at the low. And we saw during the pandemic cycle, when the market was down 35% in 5 weeks and then roared back how difficult it is to try to, time those exits and entries. So having a broadly diversified portfolio is probably, still the best way to navigate this. But you're right. The market doesn't always go up. The market only goes up 60% of the time. The odds of a 10% correction are about 1 in 2. But yet, if you can wait it out, ride it out long enough, the long-term return is about 10, 11%.
So, Urian, what's your biggest conviction heading into the next 6 months, and how has it changed over the past couple of weeks?
It's really about the terminal point for the Fed cycle, right? So we're all thinking about, Fed's going to go 50 next week and then another 50 and another 50.